setting it up to retrace a little bit this morning. And if I look at the names that are on the list of banks that are under pressure today, not all of them are open, in fact, across Europe, but BBVA is open, and that is down by 2.6%. So we certainly have an opening price there, and we'll wait to see whether we get any further movement in some of the others. ING, BNP Paribas also in focus because of that exposure to Turkey, where, just as a reminder, the president we've seen the arrest of one of his political rivals, the mayor of Istanbul, and so we're certainly watching to see what that does to risk appetite. It has certainly been showing up in weakness in the currency, and that's spread into weakness in stocks, which then is translating into weakness in the euro and weakness in the European banking sector.
So BVA is down. The healthcare sector, as has been pointed out, also under significant pressure this morning. In terms of the points losses, that's probably where the bulk of some of the losses are coming from this morning. So GSK is down, Roche is down. You've got others in Europe as also trading lower. But GSK obviously responding maybe to some of the news out of the United States, as you highlighted earlier. Roche maybe in a similar basket. So it's kind of banks and healthcare is where the weakness appears to be coming through this morning. It's interesting that HSBC, other European banks are also tracking a little bit lower as well. On the upside, some of the defence names and some of the AI trades continue to do well. Points gains being added by Schneider, Shell, Rheinmetall, BAE Systems. So the defence story is once again, the defence story may be an expectation that the conflict continues in Ukraine. Should we point ourselves in that direction?
Yeah, interesting that actually the worst performing sector now is basic resources, and there's been so much happening on the geopolitical front that perhaps we've not reflected maybe on the global growth story sufficiently today. I know that we saw quite a mixed session through the Asia session, didn't we, with actually MSCI Asia Pacific pretty flat, and there had been some outperformance in some Japanese assets, but Chinese assets more under pressure, and sometimes we take our growth signals from the latest conversations in China, but basic resources the worst performing sector at this point.
So it's interesting, defence stocks, Dassault, BAE, Leonardo, Rheinmetall, all hitting fresh 52-week highs this morning. So maybe we can kind of point ourselves in the direction of the geopolitics. The banking sector is actually full of 52-week highs, despite actually we're seeing BBVA and some of the Spanish banks lower. So ABN AMRO, Agricole, Pasky, BNP Paribas, all tracking higher this morning. So it's an interesting divergence maybe within that story.
Okay, let's just have a quick look on some Turkish assets then, and get ready to bring in our next guest to our conversation. So we've been talking about the weakness in the Turkish currency, the weakness in Turkish stocks, the banking sector under pressure over in Turkey. That has had read across into the euro, of course, as well. The euro down by 0.4%. So we'll bring that up to you, those Turkish assets, in just a moment. Bettina Mezzotti joins us, EMEA Wealth Solutions co-head at BlackRock. Bettina, thank you very much for joining us. It seems we are seeing some interesting developments within Turkey. This is having an interesting read across from a risk sentiment, risk appetite perspective into other European assets. We see weakness across European stocks now. Is this something that from an EMEA Wealth Solutions perspective you're going to focus on, the developments in Turkey? Is this new information that helps you reassess where we are on the banking story, for example, or is this not going to be front and center for you?
Thank you for having me. The geopolitical risk, generally speaking, is one of the mega forces that are really reshaping the way our economy works, and therefore how we think about markets. What is really dominating, though, in Europe is more what is happening in Germany and what is happening in Europe, generally speaking. What we've seen yesterday was German infrastructure and defense spending being voted is a major fiscal policy shift and a momentous change for Europe with the potential to really inflect the trajectory for the whole of the region. Now, we shouldn't lose sight of the fact that stimulus when it comes to defense and infrastructure takes time to lift growth, that execution is key, and also that the fiscal space across countries in Europe is unevenly distributed. Germany is a very different place than is France or Italy, for example. So this has different implications from a portfolio perspective.
Yes, and we're reminded by a number of voices. I was quoting a business lobby. We spoke to somebody who used to work for one of the ratings agencies recently. The execution is really important here, an ability to spend the money on the things that matter, clearly on the defence side, and then on the infrastructure side, and what that does to growth will be crucial. What kind of execution are you looking for? Where would you expect the money to be best spent, I suppose?
Yeah, how does that translate into effectively corporates that we could invest into? There is no doubt that Europe has staged a comeback since the beginning of the year. It has been, European stocks have been unloved by global investors for a very long time, but this has changed very much at the beginning of 2025, and we don't think the rally is over. So the first leg of the rally really was lifted by sentiment. The second rally seems to be more anchored in improving fundamental. But crucially, to your question, let's remember that most of the corporates that are in European indices derive about 30% of their revenues from the US, while only 6% from German infrastructure. So even looking at what's ahead for Europe, the US outlook, the US economic outlook is pretty much crucial for European corporates.
Good morning, Bettina. It's Guy. It is Wednesday, the 19th of March. We're into this year, but we're not that far into this year. The German stock market is up by 17%. You talk about the legs of this rally. Do you think this first leg, this leg year to date, has gone too far too fast, given what you've just said?
No, we continue to be very positive on European stock. We have recently rotated some of our US market cap weighted exposure into Europe to position our portfolio to benefit from the second leg of the rally. And really our conviction is anchored on three big drivers. The first one, as you mentioned, is momentum and the fact that investors are looking to diversify outside of US stocks. And this used to be, or this started with that being mainly a non-US idea from investor, but we've seen in the flows in ETFs in March year to date is that close to 40%, I think it's 37% of the flows we've seen in European equities actually come from the US. So there is a broader momentum in favor of the US. This is the first one. The second driver is the improving micro and macro fundamentals. Macro, we talked about it, was the German tailwinds. We could also mention improving corporates revision, and the third one, which has taken a bit of a pause yesterday, but is improving the perspective of improving reduction in geopolitical risks, whether it's the German elections that are behind us, but really a perspective of an improvement in Russia and Ukraine.
Is this a permanent divergence from the US markets? US markets are underperforming year to date. German markets are outperforming year to date. Does that spread continue to widen?
It depends on why they widen. If it's idiosyncratic situations, such as, for example, the uncertainty for the policy, in the US policy that we see, then the divergence should continue. If it's more general concern about the growth, then we should see similar reaction across both sides of the Atlantic. But specifically, the reason why the US market have had a tough time since the beginning of the year is linked to the uncertainty around the policies, and specifically the fact, so it's not so much the tariffs or the decision that the US administration has taken, but more the sentiment of uncertainty that in itself is likely to delay investment or consumption decision, which in turn are an immediate risk to US growth. So, we don't think the US is... Go ahead.
I was going to ask you, yes, I mean, that makes me wonder whether April 2nd will represent a change in thinking in the markets, given we will have at least an element of certainty in the short term. Whether that will be sustained, we'll see. But actually, what I wanted to ask you about, Bettina, is the Fed, and whether you think we'll get any kind of dovish or hawkish messaging at the margin from the Fed today.
So this is interesting because it's a central bank heavy week, but it's also one where we don't expect much to happen, really. So we expect the Fed very much to be on hold. So what the market is going to look at is much more the narrative around the statements that the Fed and the other central bank are going to put out. And we expect these narratives to acknowledge some slowing growth by not inflecting fundamentally the direction that the Fed is heading towards. To what we really believe is that the Fed will be waiting for greater clarity coming from the U.S. administration in terms of the measure they want to implement in order to inflect durably their path.
Bettina, we're going to leave you there. Thank you very much indeed. Bettina Mazzocchi joining us from BlackRock. Let's look at how the markets are performing right now, give you an idea of what the centre of gravity looks like. The core 6 looks like this, as you can see. A mixed picture. It's interesting. The pharma sector is definitely under pressure this morning. Luxury is down a little bit as well. Mixed performance when it comes to the car sector. Tech is also taking a hit. Obviously, NVIDIA was the story yesterday. Schneider's up, Nestlé's down. I can't discern anything in terms of the trend that board tells me at the moment. Maybe Joe's got some more useful things to say. What are you seeing in the banking sector?
So the banking sector is interesting, Guy. Because of this Turkey read across, we are seeing BBVA, one of the worst performers in the European market this morning. We're down around 2% at the moment. It was down around 3%. We are actually also seeing some weakness in a couple of the other stocks exposed to Turkey. ING with a little bit of exposure, and also Airport de Paris and one of the construction firms, VCAT, over in France as well. But BBVA really taking the brunt of the declines, given that big exposure via Garanti Bank. They are the majority holder of that lender, so that's accounting for the weakness over there. Then in terms of the pharma stocks, GSK was a little bit weaker over in the pharma space in the London market. This, of course, coming from this news from the Wall Street Journal that potentially the US scaling back support for HIV drug funding. That did hit Gilead in the US yesterday and feeding through into Glaxo in London today. We're down 2% on GlaxoSmithKline this morning. Then in terms of the truck maker Traton, looked a little bit weak as well, and it's the second big drop for this company over the past couple of weeks. We saw some concerns again around some changes in US regulation hitting the firm, but today it's the earnings and the orders do look a little bit soft for the German truck maker. Then in terms of your analyst ratings, Compass, that's the worst performer on the FTSE 100 today. Exane BNP downgrading, saying that they are seeing weakness in staff retention numbers in the US, and that's going to feed through into the catering sector. And this has been one of the best performing London-listed stocks over the past couple of years, a massive blue-chip firm, but we're down 5.6%, a big move and a big points weight on the FTSE 100 today. And then finally, just checking back in on Schneider Electric, as Guy mentioned a moment ago, that stock is higher. A double upgrade, another upgrade for Schneider, given the sell-off we saw related to the data center worries. RBC today reckons that has gone too far, so they're adding to the bullish calls on Schneider Electric, and that one moving 0.8% higher in Paris this morning.
Okay, Joe, thank you very much. From our equities team with a rundown of stocks that are moving. Something that definitely moved stateside in yesterday's session, and we'll keep an eye on it again today. Pre-market in the US, now open, of course, is NVIDIA. Has Jensen Huang lost the Midas touch? NVIDIA's shares certainly lower yesterday, pretty flat this morning. A lot of new product announcements. We heard more about new Blackwell. We heard more about Rubin. But has it moved the dial at all? We'll get details next. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. Wednesday session. Banks are under a little bit of pressure in terms of the European story this morning. It's a mixed picture. Some are up, some are down. One of the stocks that is certainly down is UBS. That stock trading down currently by 1.25%. The Morgan Stanley Banking Conference is taking place in London as we speak. And as we speak, Sergio Mossi, the CEO of UBS, is speaking. We're starting to get some headlines crossing from what he is saying. I don't think any of it's particularly revolutionary. Not sure the capital question will be cleared by May. Our 2025 share buyback plans are credible. Interesting, he's saying the macro consensus at the end of 2024 was wrong. I think we've all learned to appreciate that it was fairly wrong. But he is confident that UBS can meet its cost and return on tangible equity targets and may implement further headcount reductions from the end of 2025, which is a theme that this morning is running through the entire banking sector.
Yeah, absolutely. Jobs certainly in focus. So let's go to that conversation in the wider banking sector now. Bloomberg has learned that Morgan Stanley is planning to cut around 2,000 employees later this month in the first major workforce reduction under the CEO, Ted Pick. Let's bring in Bloomberg's Charlie Wells, who can tell us more about this story and other news flow surrounding the banking sector. So let's start with the Morgan Stanley then. Good morning to you, Charlie. Let's start with Morgan Stanley. 2,000 cuts. Where and why is this happening?
So these cuts are happening across the bank, and they come at a really uncomfortable time for the U.S. banking sector because if you flash back to that November election, there was so much exuberance, so much hope that this would unleash a wave of deregulation, a wave of mergers and acquisitions. Of course, it's still early days, and people familiar with the matter have said that these cuts across the bank, don't have to do with recent market turmoil, but they have to do with this issue of attrition, of staff just not leaving, and of Morgan Stanley needing to keep control on costs. So these are significant, right? It's 2,000 cuts. They've got about 80,000 people, so those will be felt across the board, and they come at a really uncomfortable time when that story about banking is turning darker.
Let's talk about what is happening over at Citi. Jay Frazier's revolution at Citi continues, but it comes in waves, and there's a series of bonuses that have been kind of tied to it and the changes that are being made, and we've had Phase 1, we've had Phase 2, both of which have kind of gone through. Phase 3 is looking a little bit more tricky.
Not good. I mean, look, these are bonuses that were tied to progress on risk and regulation. And I think if we were just talking about job cuts, I think this gets to the idea of careful who you cut. right? Because Citigroup's back office has been under a lot of pressure. Some of the regulatory groups have been fined, I think in July it was over $130 million. And so you've got to keep that, that data control. You've got to keep those risk operations moving, even as you're trying to reform a bank. But it's not looking good in this third tranche of bonuses that were tied to that performance there. It was about 70% of target. In prior years, it was 80 and then 95. And then something that was really sticky here is this third tranche of bonuses, there was an element tied to share performance. And without that, this would have been, 53% tied to performance. So not great, guys.
Okay, not great there. I'm looking at how European banks have done since the start of this year, and actually that's the best performing sector in Europe this year. But the European story and the US story are not the same thing, and perhaps increasingly or decreasingly so. So how are banks faring this year then, Charlie? Talk us through the volatility in markets, how that's playing out for them.
I think this is a really pivotal time, especially ahead of earnings season. And we've been talking in general strokes about the end of U.S. exceptionalism. I think as we start to get into that earnings story, we might start hearing the end of U.S. exceptionalism in insert industry, and we might start hearing about the end of U.S. exceptionalism in banking. And you're just seeing that in that divergent performance. I was just looking at that KBW index, that big index of U.S. bank stocks. It's down just to where it was just before the election. And so that really kind of, is evidence of that huge boost that we saw, that huge wave of optimism coming back down to earth.
Great to see you, Charlie. Thank you very much indeed. Charlie Wells joining us on what is happening with the banking sector. Let's turn our attention to US pre-market. Some of these banks may be moving there, but there are other stocks that maybe we want to focus our attention on, and one of those certainly is NVIDIA. The stock is not doing much this morning. It's up a tiny little bit, as you can see, but after getting hit quite hard yesterday, we're not getting the bounce back that some may have anticipated this morning. So NVIDIA's CEO, Jensen Huang, unveiling more powerful chips. He's developed a platform. He's got a platform that is going to develop humanoid robots. We're talking about GM, Walt Disney. There's all kinds of relationships that are being enhanced. What wasn't enhanced yesterday was the share price. But take a listen to the spread of what this company wants to achieve.
Time for autonomous vehicles has arrived. And we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car.
Tom's here to talk about this. Tom McKenzie, of course. Normally, he opens his mouth and all is good. Didn't have that effect this time around. Is this just because the market is so much more skeptical right now of what is said and the achievability of what is said?
There are some things that Jensen Huang can control and some things that he can't, which is that focus on the macro, the risks around recession, and whether ultimately that leads to the hyperscalers pulling back the CapEx pledges, $370 billion for this year, with Bloomberg Intelligence projecting maybe that gets to something like $500 billion in the years after that. So there's the elements that he can't control, which is part of the factor, I think. But to your point, in the room, according to the people, men and women in the ground, in the room, the journalists and the analysts, there was a very different mood given everything around what's happened through the impact of DeepSeek and the concerns about recession risk. The mood has changed around the Woodstock of AI, as it's been framed, given previous speeches where stocks would move. This time, stocks moved to the downside. GM Tech took a bit of a hit. He talked about T-Mobile and Cisco. None of these stocks get a material upside from Jensen Huang this time around, and that tells you a lot. This is a CEO now trying to do multiple things. One is convince his customers, the hyperscalers, that he can produce chips, the software, the hardware, and the services that are creating efficiencies, as he continues to believe there will be greater adoption. The other is trying to convince investors that this is a company that is future-proofing its business trajectory. And I like the way you emphasize spread, because they are really trying to push out. If you just look at the auto sector, they're looking at the car itself, the factory, and the services and software that goes into them. Just in that particular sector. I haven't even mentioned telecoms or robotics, other elements that he tied in as well. So it's about future-proofing the business, but some of those technologies are more mature than others, which is why there are still question marks.
Yes, and he sort of nodded to that, didn't he? So just in the making of a car, there's the manufacturing, there's the enterprise that you need for the business, and there's the in-car stuff, and these are all really different uses of AI, perhaps. But in terms of the hyperscalers, Tom, just take us through that then, because I was looking at the Bloomberg Intelligence numbers. They are estimating that actually we do see, or rather they've increased their CapEx expectations for hyperscalers in 2025 since we heard from DeepSeek. So it seems as if there is some resilience to the CapEx spending expectations, although big questions about the years after that. Is that where the focus is now?
I think that's probably an accurate way of framing it. And Jensen Huang said almost everyone in the world got it wrong when it comes to how DeepSeek changed the expectations around the demand for chips. Simply, and look, we've been speaking to DeepMind CEO about this. He said DeepSeek exaggerated some of its claims around the cost needed to train the models. Others have aligned with that view as well. Jensen Huang saying ultimately, whatever DeepSeek did, there will be greater adoption as we move towards agentic AI, so agent models within businesses and enterprises and the consumer doing different tasks. The move to artificial general intelligence, that race for superintelligence, that will continue to drive. They bought 1.3 million Hoppers last year. They bought more than 3 million of the Blackwell GPUs just this year alone.
Okay, we will continue to focus on NVIDIA, of course, Tom. Thank you, Tom McKenzie. Coming up, the lira plummets after the Turkish president's main political rival is arrested. We'll get details. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice and my conversation, my poetry, you know.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back. This is the opening trade. 30 minutes into what has been a fairly eventful session, actually, for Europe so far. So it's Fed Day. We're waiting for that big event later on today. In the meantime, we get news out of Turkey. We'll come to that in just a moment. But that has had a sentiment impact on what we're seeing here in Europe. So the Stock 600 is down by 0.2%. The DAX is down by 0.4%. And Guy, we've been watching to see what happens with the banking sector. BBVA is one of the businesses we look to there. That's down by 2%. But other banks with Turkish exposure not down by much. And maybe worth pointing out, US futures and the euro have regained a little bit of their poise from earlier.
So there's a ripple across from what is happening with Turkish assets into the lira. And in some ways that is logical because it further complicates the geopolitical narrative that we're watching. Turkey is definitely part of that. The role that Erdogan is going to play going forward from here could be hugely significant. So it just complicates kind of the outlook for Europe and its ability maybe to push forward in terms of the rearmament programs and so much of all the other stuff that we are talking about at the moment. So that effect is there. But as you say, we're going to move off that quite quickly and focus more on what is happening with the Fed a little bit later on. And that's a little earlier in the European day as well. So we need to bear that in mind. There's only a 4-hour gap between London and New York at the moment, or Washington, as it's probably more importantly to focus on. So that'll be really interesting to sort of see how that works. The market doesn't. I get the feeling the market really doesn't know what it's going to get from the Fed today.
Yeah, I feel like,
that's different to the kind of the meetings we've had over the last few kind of months and years in some ways.
There could be a sort of dovish presentation of where we are right now with concerns around the economy. I mean, not too overtly stated, perhaps, but maybe a slightly dovish stance. You could also imagine there being a slightly more hawkish stance because they're mindful, even if they don't say the T word, tariffs out loud, they're mindful of what that might do to pricing in the United States. And as we were hearing from Thanos Papasavis, everyone's still scarred by the fact that inflation went so high in recent years that they'll be mindful of inflation expectations and not letting those off the leash. But it does feel as if it's with those two arguments running around in our heads. It feels like one of those days where tomorrow we come in and we say, well, everybody got something out of that.
You could end up in that kind of scenario, couldn't you? I'm also curious to see whether or not he talks about the stock market, because there is a connection between what happens with the stock market, the wealth effects, and how that ultimately affects the consumer. And it'll be interesting to see whether he talks about that. The market has now, it seems, discounted the idea that we've got a Trump put. Do we still have a Powell put? Is that still in existence? Is he concerned about the relationship between the stock market and what happens on Main Street? So I think that's going to be really interesting as well.
I've seen so many puts mentioned in recent days. It's quite staggering. I'm going to have some sort of tally chart and tick them off every time they mention. I mean, the Fed put was the original, and the Powell put more, sort of part of that. But then that morphed into something around the bond markets, didn't it? With the Besant put around treasuries and whether that. And then I saw someone talking about a Xi put yesterday around the extent to which we've seen pain in China, China coming back to the fore, China on the front foot, while the US on the back foot. Maybe there's some kind of China put there as well.
The market, ascribing a strike price to all of these things, I think, quite hard at the moment. We also need to talk about what is happening with Turkish assets, which have been, as Anna said just a moment ago, moving quite significantly. So the stock market is down by 5.5% at the moment, 5.6%. The lira against the dollar is down by 6%. So there's some significant moves there. The Turkish bond market is reacting as well in terms of the dollar bonds. We've got them up by 20 basis points at the moment. The CDS is widening out quite significantly as well. This, as we see the mayor of Turkey, who has presidential aspirations, being detained, and potentially the political fallout from this quite significant. Let's try and understand what is happening here. Why has Imamoglu been arrested? Why are we seeing this detention? What is happening right now that has required this move from Erdogan? Paul Wallace joins us now to talk us through all of this. Paul, thanks for taking the time. Why now? Why is Erdogan doing this now? Why is this happening at this point, this sort of critical time when so much else is going on around the world? Why is Erdogan deciding that this is the moment to strike?
Hi, Guy. Yes, it's a difficult question to answer as to why now. It is not a complete surprise, and in recent months, in recent weeks, there has been a widening series of investigations and lawsuits against opposition figures. Ekrem İmamoğlu is the big one in a way. He's one of Turkey's most popular politicians. He's the mayor of Istanbul, a city of 15 million people. He was widely seen, or is widely seen, as Erdogan's biggest political rival. And the fact that Turkish authorities have decided to detain him is something that is really, really worrying markets. We saw the lira down about 6% on our screens earlier. It was down 10% only about 10-15 minutes ago. Huge losses across the board in the Turkish bond market, in the Turkish stock market as well. On Sunday, there was meant to be a rally with the CHP, İmamoğlu's party, in Turkey. It was probably going to draw big crowds. It's unclear if that's going to be allowed to still take place. And at that rally, İmamoğlu was effectively going to be announced as a presidential candidate. The vote is scheduled for 2028, but there's a widespread expectation that Erdogan will want an early vote. For constitutional reasons, he can't stand again if the vote's in 2028, but he can if it's held sometime earlier than that.
Okay, put this in the longer sort of lens of history for us, and quite recent history, really, Paul. It's within the last few years, I think, that we've had clampdowns on political rivalry within Turkey, and that for some time went hand in hand with some fairly unconventional economic policy. Then latterly, the latter of those pivoted to something more conventional. Looking at the extent to which the market has responded today versus how the market responded previous times around, it seems as if perhaps this is more in the realms of expectation than it was some years ago.
It was, but I think it's the kind of move that could undo a lot of, let's say, the goodwill that Turkey has built up since mid-2023. Erdogan was re-elected around that time, and he pivoted on economic and monetary policy pretty dramatically. He no longer called on the central bank to carry out ultra-loose policy, and the central bank raised rates massively from 8.5% to 50%. That was all to curb inflation. And broadly speaking, that has worked. That has led to inflation slowing. It's still around 40%, so still one of the highest rates in the world, but it's come down a lot from levels of 80% or so not that long ago, and we saw big inflows back into the Turkish bond and stock markets. I wouldn't say that Turkey had necessarily become a darling of the EM world once again, but it was something akin to that. Today's events could change that, or as I say, reverse a lot of the gains Turkey has made among EM investors in the last since mid-2023.
Great analysis. Thank you very much, Paul. Thanks for joining us. Bloomberg's Paul Wallace with the latest on what is happening in the Turkish story. Let's pivot to other matters geopolitical. Russian President Vladimir Putin has rejected Donald Trump's call for a 30-day ceasefire in Ukraine. During his call with the US President, Putin only agreed to limit attacks on energy infrastructure while demanding a stop to the flow of weapons and intelligence to Ukraine. Trump told Fox News the United States will try to be friendly with Russia as well as China to prevent closer ties between the two nations.
The first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. China needs us in terms of trade very badly.
That's the important wider context then. Let's bring in Bloomberg's Russia economy and government editor, Greg Sullivan, who's been following the details of the call and its aftermath. Greg, very nice to have you on the programme. So take us through some of the sticking points and whether we've got to the bottom of exactly what was agreed with regards to infrastructure, because in one readout, there was talk of not taking down or attacking energy infrastructure, and in another readout, it was energy and infrastructure, which could be interpreted differently. Take us to some of that detail.
Absolutely. I mean, the first thing that we saw really was that Putin did not offer a lot. The U.S. came to this phone call seeking Russian buy-in into this 30-day truce, and that was just simply not agreed to. Now, the two sides did announce that they had agreed to halt strikes on energy infrastructure. As you noted, there was a bit of a disagreement in the U.S. statement, which said energy and infrastructure, implying other civilian infrastructure, whereas the Russian side just said energy infrastructure. But last night, we did see drone attacks on Ukrainian infrastructure. President Zelensky saying that that included in a hospital and other civilian infrastructure sites, so it's not clear that it does pertain to anything beyond energy infrastructure. It's also interesting to note that that halt to strikes on energy does also benefit Russia. Ukraine has been striking Russian energy infrastructure with some success, aiming to harm their war economy. So it's not entirely clear that this was indeed much of a concession. But that makes sense given that Putin has been laying out very steep demands for any halt to the hostilities here. The demands that will be very tough for Kyiv to swallow, and that some Western analysts see as a play for time, maximalist demands to try and get the most concessions out of here. So it appears we are still rather far from a ceasefire deal on the horizon.
Greg, Europe not involved. That's obviously a critical factor in all of this. France and Germany watching very, very carefully. Emmanuel Macron, Scholz watching very, very carefully. Let's listen to their reaction.
We are in full agreement that the goal of all efforts must be a just and lasting peace for Ukraine. The announced ceasefire for attacks on the energy infrastructure can be an important first step on the way. The first steps are being put in place, but the objective must remain the same: a ceasefire which is measurable and verifiable, fully respected, to launch full and detailed peace talks which will enable a solid and long-lasting peace.
The view from France, the view from Germany. Greg, what does Europe do next in this story?
Well, Europe is in a bit of a tough place. I mean, for one, Trump has been negotiating directly with Russia on the issue of any kind of ceasefire. And two, we mentioned those demands that President Putin has been making. One of those demands is that he does not want weapons supplies into Ukraine during the duration of a ceasefire. Europe has rejected this, saying that they want to continue arming Ukraine to make them strong for their own self-defense. There are legitimate worries that that could weaken Ukraine during any kind of ceasefire, allowing Russia to continue rearming and make Ukraine vulnerable to a resumption of hostilities down the road. So a steep demand that Europe has really rejected. Now, Europe, on the other hand, they have been seeking to engage in the process, talking about peacekeepers that could potentially serve as a security guarantee if any ceasefire comes into fruition. Russia has rejected NATO peacekeepers on their soil, but Europe does continue to try to engage in the process as they see this it very much directly affects their own security.
Greg, we're going to leave it there. Thanks very much indeed for the update. Bloomberg's Russia economy and government editor, Greg Sullivan. Let's talk about the Ukrainian reaction now. The Ukrainian president, Volodymyr Zelensky, says he'd like to speak to Donald Trump about the details of Moscow's proposal.
We will support any proposals that lead to a sustainable, just peace. But for this, we must understand what is at stake. What are the details? And I hope to God that we know all these details so that the partners talk to us, because there are two sides in this war, Russia and Ukraine. Trying to negotiate without Ukraine, in my view, will not be productive.
Remember that Zelensky has signed up to the 30-day plan that was pushed forward by Donald Trump. It is Putin at the moment that maybe is pushing back on it. Let's get some analysis, therefore, from how the Ukrainians are going to develop their strategy around all of this. Ollie Crook joins us now from Brussels on this story. Ollie, talk us through the response and what the Ukrainians are expecting to happen next.
Yeah, well, listen, Guy, what we'll get is hopefully some insight from that from a guest a little bit later in about 20 minutes' time when we speak to the deputy head of Zelensky's office to really get an idea of how much they have been briefed by the United States, how much information is actually making to them. If you go by the statements that we heard from Zelensky yesterday that you just played there, Guy, it seems that he is still very much in the dark in terms of what the conversation is happening between Vladimir Putin and Donald Trump. When you look at the White House readout of that conversation between Trump and Putin, about half of it is about the war in Ukraine, and about half of it is about basically possible cooperation with Russia in the future on economic issues, on other geopolitical flashpoints, whether it be Iran or others. And if you read the Kremlin readout, at the very end, it's basically Putin saying that Trump was endorsing the idea of a sort of American and Russian hockey game to be played. So again, these are not things that are going to be very reassuring to the Ukrainians, who are right now also hearing secondhand that basically it sounds like Donald Trump is already discussing dividing assets. I mean, we're talking about infrastructure that exists in Ukraine between Russia and Ukraine without them sort of at the table. So I think that it's, we're going to have a little bit more insight in terms of what they're actually discussing there. But again, the Ukrainians are in a very sort of difficult position because they can't be very critical of the United States also, particularly since they have no sort of other recourse, as we learned from the Oval Office the other day, and the sort of withdrawal of military and intelligence support, which was absolutely massively damaging to the Ukrainians. So they're watching a very, very sort of tightrope, and also watching, it seems at the moment from a distance. We'll get a little bit of insight, as I just said, in about 20 minutes time when we speak to Zelensky's office and get an idea of where their sort of head is about this sort of conversation.
Yes, and we understand that delegations are heading to Saudi, and we'll see whether the Ukrainians have any part to play in that. to try and nail down some of the details between the United States and Russia, as we understand. So we'll watch to see how that conversation develops. Interesting to get the Ukrainian perspective. To that point about the wider context then, Oliver, is there a sense, and perhaps this will come out of your conversations later, a sense to which the Ukrainians are aware that their interests could be sacrificed for a broader relationship reset between Russia and the United States, something that will allow the United States to more stand up to China, perhaps, as we were hearing there from President Trump earlier?
I think it's very active in their minds. And I mean, when you just sort of look at the sort of intricacies of what's going on right now in the sort of different world axes, I mean, it's sort of interesting, right? On the one hand, Trump is talking very, very tough on China, but also saying he wants to be friends with China, saying that he wants to split apart Russia and China, but still wants to be friends with both Russia and China. And we should say that some of these sort of strikes overnight that Zelensky was referring to, this is after this sort of partial ceasefire was put into effect, these sort of the munitions that hit the hospital in Sumy, according to Zelensky, overnight, those were by drones made by the Iranians, right? And if this is sort of the idea to drive a wedge between Iran and Russia, and that's sort of Trump's goal, again, these are sort of relationships that have built up very robustly in the last couple of years, and it's not very clear exactly what Putin's position is going to be on sort of dissolving those, if these are people that have been sort of very sort of strong allies in a time when Russia was very, very isolated and is becoming less and less isolated. Of course, as you know, the great concern for the Europeans, for the Ukrainians, is that all of this sort of plays into Russia's hand, who basically has managed to sort of build a sort of side coalition and now increasingly has the Americans on board. And that is going to be a sort of very prominent topic over the next couple of days when EU leaders meet here in Brussels. We'll see what they can come up with on Friday.
Oliver, thanks very much. Bloomberg's Oliver Crook with the latest on Ukraine. And as he mentioned, at just gone at the top of the hour, so around 9:10 UK time, Oliver will be speaking to the deputy head of the Ukrainian president's office. So stay tuned with us for that conversation with Ihor Brashilo. So that'll be just after the top of the hour. Coming up, the Fed in focus, though, from a market perspective. Attention turns to Powell as the Trump put remains elusive. We will have the decision day preview for you next. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back to the opening trade. 8:51 here in London. We are waiting for the Fed. Remember, of course, it comes an hour earlier than we are used to from a European perspective because of the changes in the clocks in different geographies and when they happen. For the moment, then, we're back to that kind of holding pattern for European stocks. Yes, the DAX under pressure, down by 0.3%, but broadly speaking, we are pretty flat across European equities. We had a bit of a wobble around risk appetite thanks to Turkey. More on that in a moment. But traders are seeking clarity from the Fed later today with recession fears and uncertainty over Trump's economic policies. Let's bring in Bloomberg's Valerie Teisel. Clarity is a big word. Valerie, are we right to expect clarity?
Well, I think what the market wants to know is Powell as bothered as economists are lately about the outlook for U.S. growth? And I think we're going to know this right when the statement is released. Previously, they always characterized GDP as being on a solid footing, on a solid pace. Do they drop those lines in the statement, perhaps foreshadowing that Powell does seem a bit more downbeat on the U.S. economy? Now, note, Powell spoke right before the blackout period. That was before this recent equity slide, and he still said that he thought that that the U.S. economy was on a solid footing. Does he maintain that kind of language, or does he perhaps have to shift that and in some way mark to market his expectations for GDP growth? And then, you know, on the same line, does he draw attention to this chart on the screen here, this recent rise in inflation expectations? This is something that the Fed has reacted to quite quickly before. Remember, it was only 2 summers ago that they surprisingly hiked by 75 basis points because this UMISH 5 to 10 year medium-term inflation expectations spiked. Does he instead focus on the inflation expectations? It's maybe a reason that they are in no hurry to cut anytime soon, and perhaps the market jumps to a conclusion that we could have the Fed on hold for all of 2025.
Does the Fed have enough information at this point? This is the challenge that they face. Powell's going into this with backward-looking economic data and forward-looking tariff policy that we don't know yet. And I'm wondering how he's going to marry those two in terms of actually his ability to lean on solid ground of what he knows about the economy. Relative to history, how uncertain is what we are looking at?
Well, look, Guy, you can almost argue that if Powell does harp on the fact that there is so much uncertainty out there, that could be seen as quite a hawkish narrative, right? He needs to actually see some of this supposed, economic weakness show up in the hard data, which it hasn't really yet. So if he does frame this as being, very uncertain, perhaps that just means that he wants to wait and see, which could mean they're in no hurry to cut.
The Tim Ross piece this morning in the Journal, usually a kind of quite straight line, you could argue, into Fed thinking. Is that the precursor? Is that the kind of the heads up as to what actually we're going to get a little bit later on? Because when I read that this morning, I had a similar reaction to you. This is basically a hawkish message. We're going to lean on inflation. That's actually our primary concern. If that's the signal that we should be getting ready for, that's that's something that's going to unnerve the market.
Look, I think so, because it's almost implying that the Fed could look through some weakness in the labor market if we still have inflation expectations sitting uncomfortably high, which could essentially mean that the Fed would sit through some economic weakness until the certainty around where inflation could go around tariffs becomes a bit more, certain, whether that's in actual data or in the sentiment surveys that we have seen. So in some way, a wait and see approach could be viewed as a hawkish pivot from the Fed.
Now, any journalist who goes into that room and asks a question like, Chair Powell, is there a Fed put? Probably won't get a very straight answer. What kind of expectations do we have around any put in equities, in treasuries right now? Bring us up to speed on your thinking, Val.
Well, look, he would probably frame this response in talking about consumer sentiment actually leading to a pullback in consumer spending. Those two things aren't always correlated. Sometimes, yes, the consumer does turn a bit more pessimistic. We don't actually see that show up in the hard data. So if he couches that as something he's worried about, that this pullback in even business confidence is concerning him in terms of actually turning that into a hard data hit, in terms of, showing up in GDP, showing up in retail sales, showing up on the labor market, that could be in some way couching that as a dovish response to that kind of direct question.
I'm going to leave it there. It's going to, Valerie doesn't have to stay up quite as late and watch the press conference.
It all happens at 6, doesn't it? Or,
yeah,
rather than 7.
So we can get through it before we get to bed a little bit later on. We'll be back here tomorrow morning though with a lot of analysis. What we're also looking at this morning is Turkish assets. So just a quick recap of kind of where we are. Under pressure. This is the mayor of Turkey, main political rival, you can argue,
yeah, the mayor
arrested.
Of Istanbul. Yeah.
Sorry, the mayor of Istanbul. Simsek, the finance minister, out saying doing all we can to ensure market functioning. So there's a kind of message of the markets are still functioning. We can kind of factor this in. Don't worry, we've got this. He is seen as a safe pair of hands. So the fact that he's out early talking, I think, is quite significant and will be watched quite carefully by markets.
Yes, we'll watch to see what this move politically means for the economics and the economic policy in Turkey. We're also focusing on Tencent numbers. Should just tell you about that. That's causing a little bit of a pop-up in the Prosus share price as we bring this hour of programming to a close. There you go, just up by 1% as we get those numbers from Tencent. And, of course, Prosus has a share of 10 cents, so that's the read across there. That is it for the opening trade. Fed Day, as we've been saying later on. The brief, though, is up next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
Good morning from our global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your day. Decision day. The Fed is expected to enter wait-and-see mode, stuck between higher inflation expectations and growth fears. A banking squeeze. Citi slashes payouts for special bonuses. Morgan Stanley plans to cut 2,000 jobs. And no deal in Ukraine. President Putin refuses the 30-day ceasefire demanded by the Trump administration. Well, it's Fed decision day, and stocks are struggling to hold on to any sort of a bid this morning. Even with NVIDIA's AI Super Bowl, that not doing enough to save us. By the way, here's a sign of the times. If you bought the DAX or the Mag 7 at the start of 2024, you'd have exactly the same returns for both at this point. The Mag 7 has undone all of its relative advance for the last year. Bonds, treasuries benefited from that risk-off tone. We are moving slightly higher for your 2-year and 10-year yield, but let's call it basically unchanged. We had a 20-year bond auction yesterday that had a strong demand. It is clear that money is flowing out of stocks and into treasuries. By the way, a quick check on the lira this morning. It is getting hammered. It has extended its declines at one point beyond 10% to the weakest level on record. It's weaker by about 6.7% versus the dollar this morning. Turkish authorities detaining Erdogan's top prominent rival. That currency tends to react very acutely to any sort of domestic issues. Okay, some individual stocks that we are keeping an eye on. Citi this morning. Shares of the bank just higher by about 0.5%. It's cutting payout to hundreds of top executives in the final round of what is a 3-year special bonus program. The payouts were designed to tie top managers' compensation to see groups progress on improving risk and controls. Meanwhile, let's get a check on NVIDIA. Those shares not doing a whole lot of anything, considering that we had Jensen Huang's AI keynote speech. It was met with indifference from investors. It was called the AI Super Bowl, but it didn't do enough. He even unveiled new chips in AI computing cost concerns. He addressed those. Finally, shares of Tesla, those are rebounding this morning, 2.5% in your pre-market trade. Chinese rival BYD unveiled an electric car that can be charged just as quickly as a gas vehicle is refueled. The company stock is currently the worst performing on the S&P 500 index so far this year. Coming up in the show, we're going to be speaking to Jane Foley of Rabobank, and later in the hour, Citi's Andrew Hollenhorst. And as you saw earlier, we will be catching up with the Ukraine deputy head of President Zelensky's office for the latest reaction on what Russia and Putin said to Trump on that call. Now, when it comes to currencies, the Bloomberg Dollar Index down more than 3% so far this year, as many people called for this to be the year of dollar strength. Rabobank's Jane Foley weighing in, writing, in view of the extent of the U.S. dollar selling this year, we see scope for pullbacks on a 1 to 3 month view. That said, on a 12-month view, we see scope for the euro, the yen, the krona, and the pound, all to make further gains versus the U.S. dollar. I'm pleased to say that Jane joins us now. She's head of FX strategy at Rabobank. Jane, let's break down those 2 time horizons. Let's start with the shorter one. Why is there an ability for the dollar to fight back against some of the losses in the shorter term?
Well, excuse me, we've already seen a little bit of that this week. For instance, look at dollar yen, it's certainly off its low. So a little bit of pullbacks because the moves have just been, really very extensive. But, the dollar is clearly on the back foot. We can see that not reflected in a number of other assets. So, for instance, you were talking about, U.S. stocks. Look at those. And yet, in comparison, look at the numerous record highs we've seen from Germany's DAX index this year or from, the Hong Kong stock market as well. There is a clear asset allocation going on away from risky assets in the US, linked, of course, to growth concerns. And of course, that brings us to the focus of the Fed tonight. Will the Fed be concerned about growth? Or, which I think is probably more likely, will the Fed be constrained by the fact that inflation expectations have moved higher in the US? That will limit the ability of the Federal Reserve to cut interest rates aggressively this year.
How much impact does that have on the dollar, Jane, when it looks like there are central banks around the world that are constrained? We saw that from the BOJ today. Despite data that might show that they could have done something that looked like a hike, they cited trade as one of their reasons for standing pat. Are we in a do-nothing central bank scenario for the globe right now?
Well, certainly, for the Bank of Japan, of course, the issues are the other way around. They're welcoming a little bit of inflation and they're standalone. And that point of view, the market is pretty confident that they will be hiking interest rates again. It's probably July, but could it be June? And again, if they are hit, if their auto sector is hit by tariffs come, say, April, well, clearly that gives them room for pause. But certainly there is a room for a breather. Look at Norway. They may not even be able to cut interest rates once this cycle because of inflation fears. Sweden, their interest rate cycle could be over. We'll hear more of that when they have their next meeting tomorrow. The Bank of England, clearly constrained by the pace of interest rate cuts because of sticky inflation, and the ECB inflation or stickiness coming back there too. So I think you're right. Inflation or inflation concerns are a constraint, but I think that the central bank that this could really be a real issue for is the Fed. I mean, look at those inflation expectations in the surveys that we're beginning to come through. The Michigan survey, for instance, that is something that's going to be potentially problematic for the Fed at a time when the market's priced in 3 more interest rate cuts. You have to ask, can they really cut interest rates 3 times when inflation expectations are as elevated as they are? And I think this is something that the market really has to get to grips with, possibly in the next 24 hours, but certainly in the next few weeks.
So what wins out for the dollar then, Jane? Is it a Fed that's unable to cut as much, which would seem to suggest that there could be some strength to come for the dollar? Or is it the global flow of money that's going to Europe, with Europe spending more? What wins out in terms of the driver of the dollar going forward?
Well, I think if the market does, take that, if the takeaway from the FOMC this week is that, they're going to struggle to cut 3 times, well, the dollar could certainly see a little bit of support, some pullbacks. But I think if we look at the medium-term picture, we are seeing this asset relocation. We've had some, really exceptional news from both Europe and from China this year. I mean, we had the DeepSeek earlier on in the year, and then, yesterday's news that you just mentioned about BYD potentially having a battery system that could charge a car, 5 minutes. Again, that's potentially game-changing as well. And at the same time, of course, the fiscal response from Germany, this month, that's been huge, game-changing news as well. So these are reasons that asset allocation is being tested, is being reconsidered. But I think in the near term, a more hawkish Fed could give the dollar a little bit of a short-term boost.
So given what you're laying out and real changes to how stimulus is looking in Europe, in China, in the flow of technology, Jane, is the dollar's haven status, is it under threat right now?
I don't think that it is under threat as a haven right now. I mean, to me, the reason that the US dollar is a safe haven is because, 50% of the world's trade invoices are written in US dollars. And when there is a times of crisis, well, people just need to get hold of their dollars in order just to pay their invoices. So simple as that. So I think that is something that's a much longer term picture as we talk about de-dollarization. That's a 10, 20, 30 year horizon picture as to whether or not the dollar's safe haven status will be tested. But certainly, I think the fundamentals for the dollar have shifted, pretty significantly in the first quarter of this year. And I think it's an asset allocation or real asset allocation question that's really been on the minds of investors this year.
Well, Jane, I know earlier in the month you and the team revised up your euro call. And looking at some of the different drivers of the euro, from Germany, from spending for the potential to an end to the Ukraine war, which we saw some hiccups in yesterday, what is and what isn't priced in?
Well, I think this morning we saw a little bit of a flurry on the Turkish news. Now that, again, is a potentially another sticking point because, say, for instance, we know in Europe that the US administration, can't backstop European defense indefinitely. We've heard that question. We've heard concerns about the structure of NATO going forward. Turkey, of course, is the second largest army within NATO. Turkey trying to position itself as being a little bit more fundamental in terms of European defence, potentially in return for EU membership. And now, we have Erdogan perhaps reinforcing his autocratic dialogue. So from that point of view, that adds more uncertainty into Europe's defence picture, into the European political backdrop. And that's another consideration and something which did create a little bit of wavering in risk appetite this morning.
Certainly. Lira weaker by about 6.5% versus the dollar. Jane, always a pleasure to catch up with you. Jane Foley of Rabobank. Thanks for joining us. Let's get you some other top stories now that are trending on the terminal. Let's dive deeper into that Turkey story. The lira is the weakest on record after the Istanbul mayor was detained. It's a move that could bar him from challenging President Erdogan in the next presidential election. He is among more than 100 individuals detained in an investigation into alleged fraud, bribery, and running a criminal organization. Kathy Wood's ARK Investment Management is cutting its stake in Meta Platforms for the first time in about a year. Her sale underscores the pressures faced by the Mag 7 tech stocks. Wood has been widely known for her aggressive bets on disruptive technology. Speaking of tech, Tencent is proposing to increase its annual dividend by 32% and intends to repurchase at least $10.3 billion worth of shares. The company posted its fastest pace of revenue growth in more than a year, driven by gaming hits and overcoming an economic downturn. Coming up, Putin refuses Trump's ceasefire proposal. We'll speak to the deputy head of the office of the Ukrainian president to get the view from Kyiv. That's next on your Bloomberg Brief.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger in New York. President Putin has rejected President Trump's call for a 30-day ceasefire in Ukraine. The Russian president only agreed to limit attacks on energy infrastructure while demanding a stop to the flow of weapons and intelligence to Kyiv. Still, President Trump called the talks a win.
I think we had a great call. It lasted almost 2 hours. Talked about a lot of things, and toward getting it to peace. We didn't talk about aid, actually. We didn't talk about aid at all. We talked about a lot of things, but aid was never discussed.
Let's head over to Brussels now, where Bloomberg's Oliver Crook is joined by a guest. Oliver.
Yeah, Danny, thank you so much. It's been a very sort of eventful 24 hours. We've just had that call between President Trump and President Putin to really discuss in many ways the fate of this conflict within Ukraine. And so we're very pleased to be joined by Ihor Brusilo, who is the deputy head of President Zelensky's office, joining us from Kyiv this morning. Thank you so much for your time, Mr. Brusilo. I'd like to just get your reaction to what we've seen over the last 24 hours. We've had that conversation between President Trump and President Putin. He failed to get Putin on board for that ceasefire that he has been lobbying for and that the Ukrainians have now been lobbying for. Do you think that this sort of semi-ceasefire on energy infrastructure, does this constitute progress?
Thank you, Oliver, for having me again here with you. What I can say is that the most important thing is that this conversation has taken place, and we appreciate the personal engagement of President Trump in the process. That's very important. At the same time, we should not be deceived by the strong and complicated word combinations that Russians usually use it as their tactics in the negotiations, trying to drag out the process and to delay the possible developments that they may make use of. It's important, well, to see deep into the substance of what's going on, and not, as they usually say, we are trying to do everything so that other partners cannot see the wood for the trees. This is the usual tactics that Russian resort to. And the main thing is to keep focused on actually every word and deeds, as they may put it and say it, because usually they use this, word combinations like we have agreed to joint work to develop the comprehensive plans for the ways of settling the situation, which will be of stable, lasting, and peaceful nature. All this is just to hide the actions that they may take, and the good confirmation that after the phone talk, 12 regions of Ukraine were attacked by drones during the night with destructions and losses on the Ukrainian territories. This is still on.
And yeah, so we got readouts from the Kremlin and the White House, and obviously there were some differences in what each of the leaders were sort of presenting. In order to get through those differences, have you and your team, has Zelensky been briefed on by the United States after that call?
I believe this will be still during the day of today, and you will hear news by the end of the day. I'm hopeful about that. At least it's not off the schedule of the leaders. So let's wait what will come after every party talk to each other.
And I'd like to get an idea from you in terms of what you consider the next steps to be after this call has taken place and this partial ceasefire has been put into place. Will there be another meeting between President Zelensky and President Trump? Will there be meetings in Saudi Arabia over the next few weeks?
What I can assume and say that the teams are supposed to meet in the nearest future, and it will be important for our side that the teams can meet first Ukrainians and the American team because as Jeddah proved, they developed quite a trustful and constructive dialogue based on good words and facts. Our team, chaired by our Chief of Staff, present the situation as it is, without delay, without procrastination, and they are poised and determined to do so in the nearest future. So Ukraine is available and open for the mode of silence, as was declared by President Zelensky, everywhere, in the air, at sea, and on the land. And it doesn't have to cover only the energy infrastructure, as was proposed by the Russian side. We are absolutely open for this truce to take place, and that's how we are going to move forward and present this position to our European partners, and first of all, the American partners, because there is the trust built between them.
And I was reading the White House readout. It seemed that about half of the readout was focused on the war in Ukraine and sort of steps to try to end it, but the other half seemed to be focused on possible economic cooperation between the Russians and the United States, geopolitical cooperation between the U.S. and Russia. And there's also been these discussions that we've heard from Donald Trump talking about dividing basically Ukrainian assets already between whether it's power plants and territory. Are those parts of conversations that you're already a part of? How concerned are you about hearing those sorts of things?
Again, it's very important not to lose the focus on the main thing. We are talking about the stop to the hostilities and the end of war. After that, every proposal will be on the table. It will be a new period for Ukraine when reconstruction will start and the prosperity will be brought back to the country. But this is the second stage. The main stage is just to get the agreement on stop the hostilities, stop the killing, stop the destructions. That's in the focus of the president of Ukraine for today.
And I'd like to have your understanding of sort of what the Europeans' role can be in this conversation. Obviously, they've been sort of out of these discussions between Putin and Trump. This is a sort of bilateral, seems to be a sort of discussion. What do you imagine? What do you imagine the Europeans can bring to the table to help strengthen Ukraine's position? And EU leaders are going to meet here in Brussels over the next couple of days. What is your message to them?
Well, for Europe, it's very important just to to step up their security and defense capabilities. And there is no need to be deceived that once there is the ceasefire or the mode of silence in Ukraine, that it may not restart again. It's well understood by our Nordic European partners, and they will dedicate the bigger sums of money for the defense capabilities, and they will also dedicate some bigger sums of money into the investments into Ukrainian defense capabilities, because this will be the better security guarantees as of today. You need to have this defense to prevent the recurrence of this war. This is the main thing, and I believe they will regroup their strategy of defense for the nearest time, and it will be the main political point for every leader in Europe to secure that their citizens feel safe and secure. This is the top priority for everyone on this territory.
And I would just like to touch finally on, because we've heard, Putin's list of demands. I'll list some of them. He wants the demilitarization of Ukraine. He wants no NATO membership. He wants to give up basically the regions of Luhansk, Donetsk, Zaporizhia, Kherson, no European forces within Ukraine. Have you had any reassurance from the U.S. side that they will basically not cave into these demands, that they will stand strong against these?
This is absolutely necessary and important for us to keep the Americans on board, in meaning that they cannot just lose the global leadership position like so, and they will not succumb to these demands by the Russian that try to equalize and to be equal partner of the United States, as their readout of the conversation with President Trump shows. It's quite a dangerous game to say. It's not like you don't need to repetition of this catch-22 that was well described by Joseph Heller in his novel. So the main thing is not to be deceived by this complicated verbal combination that Russians use every time when they hold negotiations.
Well, Ihor Brusila, thank you so much for your time this morning from Kyiv. That is the deputy head of President Zelensky's office, joining us there in the sort of very consequential last 24 hours for the discussions between Donald Trump, Vladimir Putin, and then the sort of briefing that we'll get, hopefully, for the Ukrainians over the next coming day.
Yeah, a quickly changing situation. Oliver, thank you so much for bringing us that interview. Again, that's Bloomberg's Oliver Crook with an interview with the Ukrainian deputy head of the office of the president. You're watching Bloomberg TV.
In case you missed it on the China show.
Compared to a 10% tariff on Chinese exports to the United States, I mean, even the entire determination of the fentanyl industry in China is totally worth it.
I think this is a monumental moment for global AI development. DeepSeek did was not only just make the products free, but also they released the entire research open source, so you can see how they did it. This has forever democratized this current most advanced version of AI.
How do your students feel about their jobs prospects?
There are a lot of opportunities in this AI application fields. On the other hand, if you look at traditional manufacturing, I think the main problem is that there's a lot of mismatches between supply and demand.
Don't miss the China show live every weekday.
From the world of politics politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Bloomberg Brief. Let's take a look at some of the front pages around the world. First up on the Wall Street Journal, the Trump administration has dismissed 2 Democratic commissioners on the FTC. Now, they claim that the removal is illegal, with both considering legal options, including a lawsuit. That legal fight could have consequences for Trump's authorities over other agencies, including the Federal Reserve. Next up on the Bloomberg, Morgan Stanley is planning to cut about 2,000 employees later this month. Sources say the cuts will take place across the firm, with the exception of its roughly 15,000 financial advisors. It's aimed at keeping a lid on costs, with executives grappling with minimal attrition in their ranks. And finally, we have to end with this. The Wall Street Journal leading with the astronauts safely returning to Earth. Butch Wilmore and Suni Williams went back to Earth safely aboard the SpaceX Dragon capsule. It splashed down at 5:57 p.m. Eastern after 2 NASA veterans spent 286 days in space. By the way, if you saw the images, there were dolphins beautifully swimming around the capsule. What a wonderful image to see. All right, coming up, we get back to the Fed. This is Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure, it's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. It's decision day. The Fed expected to enter wait-and-see mode, stuck between inflation expectations and growth fears. A banking squeeze. Citi slashes payouts for special bonuses, while Morgan Stanley plans to cut 2,000 jobs. And no deal in Ukraine. President Putin refuses the 30-day ceasefire demanded by the Trump administration. It's FOMC decision day, and stocks attempting to rebound after a fall that was led by tech yesterday. Even with NVIDIA's AI Super Bowl, that didn't do anything to assuage fears. By the way, here's your fun fact of the day. If you had bought the DAX and the Mag 7 at the start of 2024, you would have nearly exactly the same returns at this point. The DAX has caught up and the Mag 7 has caught down. The good news is as that has happened, bonds have indeed done what they're supposed to do. There was demand for them yesterday. We're a little changed this morning as we wait for a Fed decision later this afternoon. 4.28 is where you stand on your 10-year yield. We had a solid 20-year auction yesterday, too. A quick check on the lira this morning. The dollar overall is strengthening, and maybe this is part of why. That a haven bid does come in when you have things like this, where Turkish authorities detain Erdogan's most prominent rival. That sent the weaker, at one point weaker by 10%. It's now weaker by 5.7. So we do have a Fed decision on deck. Andrew Hollenhorst of Citi looking ahead to that decision, writing, quote, "We think risks skew dovish at this week's meeting. Survey data suggests that firms and consumers are poised to pull back on spending. And even before any changes in policy, economic growth appears to have slowed early this year." I'm pleased to say that Andrew joins us now. Andrew, I'm curious about this because when Powell last spoke before the Fed blackout period, he had said that the economy was on solid footing. How big of a shift or little of a shift in his language are you expecting?
I think it's going to be a subtle shift, but I think they do need to start making that shift, and I think Powell will start it at this meeting. The data that have come in, and remember, this is data really before we had any policy changes. Weaker consumer spending. In January, consumer spending was actually down. February, we saw the retail sales number earlier this week, and yeah, you got a little bit of a bounce back, but not that impressive of a bounce back. So it does look like the consumer has slowed, and that's huge for this economy because this is an economy that's been supported by the consumer.
At the same time, though, this is a Fed that we know has been reactive to survey data like University of Michigan, which has had inflation expectations move much higher. So can they really skew a little bit dovish, even just a tad, when you do have those factors coming in?
It's really not where you want to be as a central bank. They're going to be revising down their growth forecasts. They're going to be revising up their inflation forecast, to your point. And yeah, those inflation expectations, that's critical because they are thinking about scenarios now where they will need to be cutting interest rates even before core inflation has returned to the 2% target. You can do that a lot more comfortably if inflation expectations are anchored. Now, University of Michigan is one of many, many choices for inflation expectations that you can look at. I think they're going to focus on some of the other measures. New York Fed survey has been a lot more stable. If you look at the market-based expectations, those have been more stable. But the hawks, they will be pointing to that University of Michigan number.
It was interesting. Nick Timmeros writing in the Journal that the change that they see coming is this idea that the window to cut because of good news is over. Do you expect Powell's language to reflect that idea as well?
Yeah, I think that we'll still have the idea that inflation is going to converge towards 2%, but with this overlay now that, well, it would have been at 2% if not for tariffs. And that's where it gets really tricky for Powell because we've heard Powell not want to speculate a lot about coming policy. On the other hand, we have tariffs that are going to be announced April 2nd. So we're getting to the point where that does need to be acknowledged.
But if they acknowledge it, but they do nothing. Is doing nothing in a sense hawkish, though? Because they're letting policy remain as tight as it is, even when you have that growth coming in. They can maybe guide a little bit more dovish, but is a do-nothing Fed more of a hawkish Fed at this point?
It's less important what they do with policy rates at this meeting. It's widely expected they're not going to move them, so that's not really going to move the market. The question is, in the dot plot, do we see the dots that are drifting a little bit lower? I think we'll see some of that, maybe not a lot of that, but some of that. And then in Powell's rhetoric, this balance between inflation and growth, and that's why I think he needs to start acknowledging this downside risk towards growth. Otherwise, it could end up being read as a hawkish meeting, and I don't think that's how they want to come out of this.
Neil Dutta at Renmac laid it out. Basically, he has to do nothing. And part of it was about the politics. This idea that if he skews more dovish, markets could rally, and then it's seen as an endorsement of Trump policy, and he can go further. And then if he skews hawkish, it's seen as him condemning Trump policy. Are they stuck when it comes to the politics? Do you think that that is a fair balance that's playing on their mind?
I think they can really tie themselves in knots if they start thinking about how they respond to the policy, and then does that influence future policy? I think what they have to do is just look at the data, and it is a difficult slate of data with stronger inflation, slower growth, but that doesn't need to paralyze them. And I think Governor Waller has made that point, that just because there's a lot of uncertainty doesn't mean you do nothing.
Can we just go over just how weak you think things are right now? Because the sentiment measures have been weak. Companies have started to talk about, to your point, as we pointed out in the beginning, started to talk about uncertainty and a slowdown. It hasn't showed up in the hard data yet. Is that just because it hasn't showed up, it's operating with a lag, and it's coming?
I think there is some weakness that's coming. We're already seeing some weakness. Consumer spending running about 4% annualized last year. Looks like we're running more like 1% in the first quarter, so that's a big slowdown already. Then you think about the government job loss that's going to happen in the coming months. That's going to feed into not just a higher unemployment rate, but when people see the unemployment rate moving higher, even if you're not a government worker, you start thinking, is this a weakening economy? Should I pull back further on spending? So I think we will see this slowdown continue.
I was going to say, you've seen some of the credit card spending hold up, except basically for Washington, D.C. If we are in a scenario where Washington, D.C. and the surrounding areas are particularly hard hit, can the rest of the U.S. survive that?
I mean, if it's a very regional shock, then that's less concerning for the overall economy. I think the problem is, even if you have government layoffs, it's not just in D.C., it's in the surrounding area, to your point. It's private sector contractors also. And so that starts to become more dispersed throughout the economy. Again, people see that, they pull back on their spending. Other firms pull back on their hiring. That's how you generate a downward cycle.
When it comes to inflation and what might happen with increase of prices as tariffs, there's a really interesting story from the FT saying that much like Walmart, Costco has also gone to its suppliers in China and said, you need to help us with these prices. You need to help us with coming tariffs. Do these moves from corporates help alleviate some of the price increases that we might get?
Yeah, I think so, and I think that's related to this softer consumer story. If you can't push up your prices to reflect the increased costs of tariffs, then they're going to be absorbed either by the supplier, by the retailer. So it's not that we won't see any price impact from tariffs, but some of that's going to be absorbed by the firms.
Andrew, so wonderful to see you. Always a pleasure to have you on Fed Day. Good luck for it. I know you're going to hunker down like the rest of us. Cities, Andrew Hollenhorst, thank you so much. Okay, coming up elsewhere, banks keeping their lids tight on costs. We're going to have more on that story for you next. This is your Bloomberg Brief.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, It's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger in New York. Let's head over to Wall Street, where Bloomberg has learned that Morgan Stanley is planning to cut around 2,000 employees later this month in the first major reduction under CEO Ted Pick. Let's bring in Bloomberg's Charlie Wells on this. Charlie, what sort of restructuring are we seeing at Morgan Stanley?
Danny, so we're seeing these cuts happening across the board, and this is coming at a time when Morgan Stanley is really trying to keep a lid on costs. And one of the issues they've really had at Morgan Stanley, but that we've also seen across Wall Street, is this issue of attrition. It's the fact that a lot of these major banks, a lot of these major professional services firms just aren't seeing staff leave in the ways that they naturally would. And this speaks to a sort of cooling that we're seeing across that white-collar labor market. And we're seeing these cuts at Morgan Stanley, according to people familiar with the matter, happen across the board. Some of this is going to be based on performance. Some of this is going to be based on Morgan Stanley trying to kind of relocate people, kind of shift people where they want them around the world. And some of this also has to do with AI.
Well, it's not just Morgan Stanley. It's Citi, too, not necessarily cutting employees, but taking back or at least reducing some bonuses that it has on this 3-year transformation progress. How much of this, Charlie, is a wider banking issue versus just Morgan Stanley and Citi specific?
Yeah, Danny, a lot of these headlines that we're getting this morning are kind of negative on the banking sector. I think when you look at those Citi bonuses, that was a special bonus program tied to progress that top executives were making on risk and regulatory transformation. And it was a 3-year program. This was the 3rd tranche of that 3-year program. And actually, the payouts tied to performance were not great here. They came in at about 70% of target. The year before, it was about 80% of target. And the year prior to that, it was 95%. But when you dig into some of these numbers even deeper, the story gets worse. So this 3rd tranche, some of those payouts were tied to Citi's equity performance. But when you cut that out, you get that 53% tied to performance on these regulatory issues. And I've just got to say, Citi's back office has been under a lot of pressure over the years. They've been fined. They were fined back in July on some data quality management issues over $130 million. And so keeping up these regulatory and compliance issues is crucial for this bank as it undergoes a transformation. But this, in a proxy filing, is the bank basically saying they've not made enough progress fast enough.
Charlie, really appreciate that update. That is Bloomberg's Charlie Wells on Citi and Morgan Stanley and wider banking. Now, another stock that we are watching in the pre-market, NVIDIA shares are higher, 1.1%, but they have been under pressure as of late. Citi and the rest of tech falling yesterday by some staggering amounts. They have lost a lot this year. Now, it's higher pre-market, but that's after CEO Jensen Huang used his annual developer conference to try and drum up optimism and get some good news, but investors doubt that the company can keep up its blistering pace of growth.
Time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all 3 areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car.
For more, we're joined by Bloomberg's executive editor for Global Tech, Peter Elstrom. Peter, this was supposed to be the AI Super Bowl, maybe the thing that comes and saves tech, but it still had a really rough run yesterday. Was this a story of disappointment?
Well, NVIDIA has a lot to prove here. As you've mentioned earlier, the stock has been on quite a tear over the past few years. But this year, it's under a bit of pressure because there are questions about how much companies are going to spend on AI in particular, whether they're going to be able to get the payoff at the end of that. So really, Jensen Huang is using this developers conference as an opportunity to talk about new products, but also new ways that companies are actually applying those products to the real world. So he alluded to this partnership with GM where they're trying to put AI into cars, into the design of cars, into the manufacturing of cars, and into the cars themselves. That's just part of what he talked about. He also talked about new chips that are coming out. The Blackwell Ultra is supposed to be another boost in terms of the AI capabilities for these chips. There's an operating system that they plan on using in some of these factories. They're also trying to put AI into PCs, and they came out with a platform for robots, too, to be able to use some of these AI applications in robots. So really, they're pressing hard to be able to show new opportunities for AI to be applied in the real world. That certainly would boost their business if they're able to deliver on those promises.
Peter, I thought this was really interesting. Jensen at one point said nearly the entire world got it wrong, that agents and reasoning are driving 100 times more AI computing power and demand than they expected 1 year ago. It's a not so subtle nod to the aftermath of DeepSeek in the thought by many that there would be less demand because of advancements and efficiencies. How far has Jensen Huang gone to convince his investors and the wider populace that demand is still there?
Yeah, we're seeing that. I mean, Jensen is making this case right now to the company. Certainly what we're seeing is the hyperscalers in the U.S. are continuing to spend very aggressively. They're boosting their CapEx spending by about 44% in the next year. They're aiming for $370 billion, so they're spending very heavily. And we've seen this in tech before where the tech companies realize they can't wait to see whether the demand is there first. They're going to pour spending into the market. They're going to try to capitalize on it. And you know that if you get a big market share here, you're able to capitalize. We've seen that in e-commerce and search and web browsing, all sorts of things in the past. So these companies are betting that now is the time to make the investments and they'll see the payoff in the future. DeepSeek has called into question whether you need to have big spending, though, to be able to get that kind of revenue in the future. I think the optimists see DeepSeek as a place where you can maybe spend less money but still get a payoff afterwards. The pessimists think the companies like Alphabet and Meta, Amazon that are spending so much money right now are maybe overspending on technology where you don't need to spend that much cash. So we're going to see how this plays out in the next couple of years.
So that's one part of the narrative that's been going on in tech, Peter. But the other one has just been China showing up in a big way with its technology. There was this fascinating FT story yesterday that China has delayed its approval for a BYD plant in Mexico because they're fearful that BYD technology is going to seep into the U.S. It's kind of the flip side of what the U.S. has been worried about. The U.S. has been fearful that its technology will get into China. Just how much of a moment are we in terms of this flip where China supremacy in tech is starting to come to the fore?
Well, you are seeing examples of this. We've seen some of this in the past. ByteDance, for example, I would say with its TikTok application certainly was the world leader in terms of short video, and we've seen that play out. Now it's quite controversial in the U.S. BYD in electric vehicles also has been able to demonstrate some global leadership where its cars are much cheaper, its batteries work well, it has many design breakthroughs. And DeepSeek was another one where we've seen engineers in China really accomplish some technological breakthroughs that their counterparts in the U.S. were not able to match. They were able to do it ahead of time, partly because of some of the constraints that they've got. Lower costs, less accessibility to some of these chips from NVIDIA in particular. So DeepSeek was able to show those breakthroughs. And we'll see if there'll be more. Tencent is reporting its earnings right now. It's talking about very big ambitions in AI. Alibaba has been able to make some significant advances in AI too. So the engineers there are certainly showing that they are globally competitive, and some of these businesses are now becoming quite competitive too.
Peter, thank you so much. That is Bloomberg's Peter Elstrom. Now let's head over to Washington, D.C. President Putin has rejected President Trump's call for a 30-day ceasefire in Ukraine. The Russian president only agreed to limit attacks on energy infrastructure while demanding a stop to the flow of weapons and intelligence to Ukraine. Still, President Trump called the talks a win.
I think we had a great call. It lasted almost 2 hours. Talked about a lot of things, and toward getting it to peace. We didn't talk about aid, actually. We didn't talk about aid at all. We talked about a lot of things, but aid was never discussed.
For more, we're joined by Bloomberg's Tyler Kendall in Washington, D.C. So, Tyler, what was the outcome of this call?
Well, Danny, you said it there, President Trump trying to paint this as progress. It was one of the real first tangible concessions that we have seen from Russia since the war started. But to be clear, it fell way short of U.S. officials' stated goal, which was to get Russia to sign on to this 30-day ceasefire plan. Now, you mentioned at the top, we are expected to see a pause when it comes to attacks on energy infrastructure. And then according to the White House readout, the next phase in this will be negotiations for a maritime ceasefire on the Black Sea, followed by talks for a full ceasefire and then a permanent peace. Those talks are expected to happen in the Middle East, according to that readout, but we have not been given a timeline on when that could start. There are still, of course, some big roadblocks here. According to the Kremlin's readout of the call, Vladimir Putin made several demands of President Trump. That includes confirming the Bloomberg News headline yesterday that Putin would like to see a halt to all Western military weapon flows into the country. Remains to be seen if that's something that this White House would really get behind, considering just last week it reversed its own halt on U.S. military assistance and intelligence sharing with Ukraine in order to get them on board to this 30-day peace plan that U.S. officials have said will be so critical. We should just mention we did hear a response from Zelensky yesterday saying that this shows that Russia is not ready to commit to a ceasefire. In a post on X overnight, Zelensky said that there were drone attacks on civilian infrastructure. He is now urging the U.S. and Western allies to ramp up their sanctions on Russia to get them to the negotiating table in what he says would be a more serious way.
So we'll see what any outcomes might be of those talks in the Middle East. But closer to home, Tyler, there was a development that caught a lot of people's attention, and that was Trump dismissing Democratic FTC commissioners. Now, they've presented a legal challenge to that, but the legal precedent that says President Trump can't do something like that is the one that protects, for example, Federal Reserve officials. Is there a fear that should this be allowed, should this go ahead, that other agencies like the Fed will be under the firing line?
Well, Danny, this really is just the latest string of firings within these independent agencies, raising questions about how this administration might be trying to exert more control over federal regulators. And then, of course, what this means for that legal precedent that is typically used to shield such appointees. According to a letter obtained by Bloomberg News, the White House Office of Personnel sent these two commissioners a letter saying that their service at the FTC was, quote, inconsistent with the administration's priorities. At least one of those fired commissioners is saying that they do plan to litigate this in court, which could serve as an even bigger precedent as we see these other officials targeted at other federal regulators. It is interesting, though, just to beat on the FTC and exactly what is happening there. There's actually been a recent bipartisan movement, particularly when it comes to cracking down on big tech. For example, the current FTC commissioner, Andrew Ferguson, picking up where Lena Khan left off on some of the probes when it does come to looking into antitrust concerns within the sector. And just quickly, if we could go back all the way back to this summer, you'll recall that part of the reason why then Senator J.D. Vance, now Vice President J.D. Vance, was chosen as Donald Trump's running mate was because of his more populist views, including some of his tough talk when it came to big tech.
Yep, something important that I think a lot of us forgot. Tyler, thank you so much. Bloomberg's Tyler Kendall in Washington. As we head to the break, just want to give you a quick look on the lira. Turkish lenders, according to sources, are said to have sold about $8 billion to support the currency. This came after one of Erdogan's closest rivals was detained. You can see where that support came in. At one point, the lira weaker by more than 10% versus the dollar. That support, about $8 billion, paired some of those losses. This is Bloomberg.
coverage at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Let's get you set up for your trading day. General Mills will be reporting earnings before the bell this morning. And then it's the big one. The Fed announces its rate decision at 2 p.m. Eastern. And then maybe more highly anticipated, the news conference kicks off at 2:30 p.m. Now, some stocks on the move this morning. Tesla leading Mag 7 higher after closing down more than 5% yesterday. A lot of that came from BYD unveiling their fast-charging EV, so those shares up nearly 3%. Gilead down nearly 3%. A Wall Street Journal report that the U.S. Department of Health and Human Services is considering HIV funding cuts. Rounding it out, Equity Health down a whopping 14.3%. Fourth quarter earnings missed estimates, and 2026 guidance disappointed. I want to take you out in this hour with a view on the dollar this morning. It is strengthening. We're talking to Jane Foley about this. The haven status is still there, and perhaps events like what's happening in Turkey underscoring that, with political drama feeding into dollar strength. All right, that's it for your brief. Surveillance takes things from here.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
We want to see where the Fed is falling. Are they starting to identify some of these signs of weakness?
They're likely to take down their growth numbers, but they're likely to take up their inflation numbers. So this is a really difficult environment for them.
They will be focusing on growth slowing down, and therefore the risks are that markets will be pricing in more cuts at the time.
People are looking for the Fed to sort of come to the rescue of the economy by cutting rates.
I think it's just too early for the Federal Reserve to make a decision, given the uncertainty about policy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday after snapping a two-day winning streak, equities a little softer, heading into the Fed decision later on this afternoon, following a ramp-up in market volatility. It's leaving investors laser-focused on Fed Chair Jay Powell's news conference and the committee's updated forecasts. Bank of America indicating, quote, the Powell put is not forthcoming. And those forecasts are likely to reflect stagflation, weaker growth, and higher inflation. That stance could leave this market between a rock and a hard place.
Expect a lot of data dependent. Expect a lot of nothing. Expect a lot of not giving you any direction at all, which raises the question, who blinks first? Is it the Fed put or is it the Trump put? And right now, if you've got neither, what is the ballast to really stave off some of this concern that maybe the U.S. exceptionalism story just doesn't have it anymore?
Chairman Powell, the first week in November, we don't guess, we don't speculate, and we don't assume. Back in November, there were no policies. Back in November, they didn't have to put out forecasts. This time around, we've got some policies, and they've got to put out some forecasts.
Which is why, actually, this meeting might be tougher to Jay Powell to really talk about, because he can no longer say we can't assume. Maybe they can't assume for the April 2nd rollout of tariffs that are set to come, but there's 25% tariffs on steel and aluminum coming into those imports into the United States, and 20% tariffs on China. At some point, they're going to have to talk about the policies that are in place today.
It's that day today. The Fed chair says we're not in a hurry. The more he says we're not in a hurry, and the more the economy signs shows a weakness, the more we're not in a hurry sounds hawkish.
It's very difficult to understand where the balance of risks are in this market. If they say we don't worry and we stay on hold, then people start to worry about the downside growth to inflation. But one of the most notable aspects of this market, I know you've picked up on this as well, is that as we've seen weakness in the consumer priced into equities, you haven't seen bonds, especially long-term bonds, as the ballast at a time where there is concern about inflation globally and concern about borrowing globally. So the Fed is between a rock and a hard place. The market's between a rock and a hard place. Don't expect Fed officials to be the ballast of some sort of clarity. And it's not just the signal to the market. Neil Dutta is talking about how this is actually going to be a very political meeting. If the Fed is hawkish, markets will probably weaken further. As a result, they'll take some heat off of the White House. But if they're dovish, do they encourage this administration to actually dial it up when it comes to things like trade policy?
Equities bouncing back this morning on the S&P 500, higher by 1/3%. Coming up this hour, we'll catch up with Sebastian Page of T. Rowe Price on what's behind the recent sell-off. Terry Haynes of Pangea Policy as Trump cautions on China-Russia ties, and Dan Ives of Wedbush on NVIDIA's new chip lineup. We begin this hour with stocks steady ahead of the Fed decision at 2 p.m. Eastern Time. Sebastian Page of T. Rowe Price writing, I expect a slowdown, but not a recession. President Trump was not bluffing on tariffs, and the administration has more tolerance than expected for equity sell-offs. Sebastian joins us now for more. Seb, good morning. Good to see you.
Good morning.
Let's start with the Fed decision later on this afternoon. What are you looking for?
I think Powell's going to have to acknowledge that unemployment is okay. You know, you have claims in the low 200s. The historical average for claims is 350. So that might end up sounding a little bit hawkish. Or as you were just saying, maybe just saying we're not in a rush might sound a little bit hawkish as well.
That's the problem we face today in this market. Where do you find comfort? I want to go straight to it. Been thinking about you. In the bond market over the last few weeks, equities have dropped lower, Bond yields have just stuck, glued to 430 on a 10-year. The risk mitigation characteristics of the 10-year Treasury seem to have been reduced over the past 2 weeks. What gives?
Inflation risk makes bonds less of a diversifier. And thank you for thinking about me. I'm thinking about you too. I watch you every day. But look, on bonds and on rates, we're having these debates in our asset allocation committee. But we're still underweight duration, long cash, and long credit because we don't expect a recession. Look, we were talking about running off the air, right? If you want to look at your watch while you're running, if you want to look at monthly inflation data, the last 4 months annualized to 4% inflation. On top of that, we're running massive deficits still. And then on top of that, you know, once upon a time, tariffs were inflationary. So I think there's still room for yields to rise here.
I don't want to interrupt the bromance. You guys can carry on, but I will say...
I was very touched.
I could tell, and I think it's wonderful. I do wonder about what the goal is of this meeting and the political aspect of the Federal Reserve. If they announce that they're going to pause quantitative tightening, at least until the debt ceiling issues are resolved, could that be almost an olive branch to this administration to say, look, we're working with you while also keeping rates where they are and not addressing the weakness in favor of maybe inflationary concerns?
I'm curious how often the word uncertainty is going to be mentioned. And by the way, I remember when Surveillance had a drinking game about the word transitory.
Yes.
And last week on your show, I've never heard the word uncertainty mentioned so often. And it's a little bit of an unsatisfying word because it means we don't really have insights, right? And I think Powell's going to use that today, uncertainty. It is true historically that when uncertainty goes up, stock prices go down. I actually asked State Street to run some numbers for me because they have something called media stats, which is how often a word is mentioned in the media, and they can break it down by weeks. It's fascinating. They sent me this chart. The word uncertainty was mentioned in the media more often than at any time in their 10-year data sample last week. So I think that might be the theme of the Fed discussion today.
Is just the uncertainty alone possibly undermining U.S. exceptionalism? And I say that at a time where you've been underweight U.S. equities and you had been going into the soft patch, and it sounds like you kind of remain so.
Look, I think it's not just the tariff headlines. It's not just that. It's not the only reason why the markets are selling off. There are signs that growth is slowing, and maybe this will be part of the discussion today as well. And, you know, we got into this with extreme valuations in the top 5% of the historical range. And then you do have uncertainty. But on growth, the consumer data is not good. The last 2 data points are not good. So there is more going on than the tariff headlines, hence this obsession with the word uncertainty. It's a muddled picture.
Do you think then Jay Powell will lean into the uncertainty and the potential downside risk of growth or the potential upside shock of inflation because of tariffs?
I think that's the line he needs to walk. That's the narrow path he needs to thread in his communications. And it's going to be a little bit of both. And I think we're still going to hear, like we hear very often nowadays, notions of data dependence.
What did history teach Jay Powell? Because the Bank of America Fund Manager Survey yesterday said the last time participants were this worried about one single development, it was 5 years ago when their main concern was COVID. Do you think that's actually warranted?
I don't think so. And look, we've been de-risking into this. We're close to neutral on stocks versus bonds. I think we've had a bit of a correction here. I'm not super bearish on risk assets for the next 6 to 12 months. I think it's a slowdown, not a recession. And we're not in panic mode whatsoever. And, you know, if stocks go down 15, 20% from the peak, we'll look to be buying, not selling.
And as you suggest, it goes beyond trade and trade headlines. GM on the month so far is down about 1%. If you thought this was all about trade and trade was leading this sell-off, then GM would be down and down aggressively. And that's not the case so far in March. Tesla is down 23%. Nvidia is down by close to 8%. Meta is down by close to 13%. Apple is down by 12% so far this month, and we're only halfway through. When you diagnose the sell-off for people, what gives? What's it about?
Growth. Valuations coming in. I call this the tyranny of high expectations. 15% year-on-year earnings growth expectations. Expectations through the roof for the Mag 7. My colleagues started calling it the Lag 7. It's down about 20%. And yes, uncertainty in political headlines, but also broader geopolitical uncertainty. These are the factors that are driving this sell-off. But let's not forget that we just got into this with very, very, very high valuations by historical standards. This inherently creates fragility.
Jim Reed of Deutsche Bank, Lisa, talking about this early this morning. I would say sentiment changes towards the Mag 7 are a bigger impact domestically than the trade headlines, even if both matter.
On Monday, let's put this into perspective. It was the smallest advance ever on the S&P 500 when 90% of the constituents were actually up on the day. Why? Big tech. It's momentum trade at a time where a lot of people are frankly questioning not just whether the U.S. is still exceptional, but maybe everyone's exceptional. Maybe the idea of exceptionalism really is tied to fiscal spending, and that's also in Europe, and that's also in China.
Been a massive part of the story over the last few months, that's for sure. Seb, it's good to see you, sir. As always, thanks for being here. Sebastian Page there of T. Rowe Price on the equity market and the big sell-off we've seen over the last several months. Also need an update on the geopolitics. So there was an important call yesterday taking place between the Russian and US leaders, Vladimir Putin and President Donald Trump. And one of the outcomes of that call was a form of truce over hitting energy infrastructure. We heard from Zelensky just moments ago, speaking in Finland, saying that Russia sent 150 drones and hit Ukraine energy overnight. That raises some big questions about what was actually agreed to in the last 24 hours.
And it raises big questions on the roadmap to actually get a full 30-day ceasefire to stop the halting in full, not just on energy infrastructure. Also key for Zelensky saying right now, he will be getting on a phone call today with President Trump, and I imagine Trump is going to give him a bit of a readout on what Putin said, and really, where do these talks go? It looks like into the weekend in the kingdom.
We've got an important conversation coming up later on this morning as well, so 8:30 Eastern time. Don't miss this one. The White House Special Envoy, Steve Witkoff, joining us following that call between the Russian and US leaders in the last 24 hours. That will take place in a couple of hours from now. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. The Turkish lira is trading at its weakest level on record. President Erdogan's most prominent rival, Istanbul Mayor Ekrem İmamoğlu, was detained in a widening crackdown on opposition. People familiar also told Bloomberg that Turkish lenders sold about $8 billion midday to support the currency, paring some of the worst of the losses. Elsewhere, Morgan Stanley is planning to cut about 2,000 jobs later this month. Sources telling us that the cuts will take place across the firm, with the exception of its roughly 15,000 financial advisors. The cuts are tied to performance and the impact of AI and automation. More cuts are expected in the coming years. Speaking of AI, NVIDIA CEO Jensen Huang unveiled new chips and technology at the company's annual developers conference and tried to address concerns about the cost of AI computing. Huang unveiled more powerful chips that he said would provide a clear payoff to customers, including a successor to NVIDIA's flagship AI processor, Blackwell Ultra. That's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, friends and enemies.
The ceasefire, without going a little bit further, would have been tough. Russia has the advantage, as you know. Putin actually said to me, if you're my friend, I'd hate to see you as my enemy.
Terry Haynes of Pangea Policy joins us next to break down what's been agreed to and what hasn't been agreed to in the past 24 hours. From New York City this morning, good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
There is a growing list of banks cutting GDP forecasts on Wall Street. JP Morgan, Morgan Stanley, Goldman, Deutsche Bank in the last 24 hours. RBC looking for just 1.6% so far, looking out 12 months. Wolf Research doing exactly the same thing as well. Big revisions. In the bond market, though, the 10-year just holds steady close to 430. That's where we are this morning, 428.49. Yields totally unchanged. Going into this Federal Reserve meeting a little bit later this afternoon. In the equity market, equity futures firmer, up by 1/3% after snapping a 2-day winning streak in yesterday's session. Just a bit firmer going into Chairman Powell a little bit later on. Under surveillance this morning, friends and enemies.
A ceasefire without going a little bit further would have been tough. Russia has the advantage, as you know. It could be we end up in World War III over this, which is so ridiculous, but, you know, strange things happen. And I think we had a great call. Putin actually said to me, if you're my friend, I'd hate to see you as my enemy.
So here's the latest this morning. President Donald Trump striking a deal with Russian President Vladimir Putin during a phone call just yesterday. The Russian leader agreeing to hold a tax on Ukraine's energy infrastructure, but falling short of a full 30-day truce. Bloomberg's Tyler Kendall joins us now for more. Tyler, go through the latest from what we've just heard from Zelensky, because it seems to contradict what was agreed in the past 24 hours.
John, good morning. Real big questions this morning as we get this fresh reaction from the Ukrainian president, speaking moments ago, confirming that he will have a talk with Donald Trump later on today, but also confirming that there appears to have been Russian drone strikes on Ukrainian energy assets overnight, despite this agreement that we got yesterday that Russia would halt such attacks on Ukrainian energy infrastructure. Now, up to this point, President Trump, as you heard him there, had really been painting this as a step towards progress. It had been considered to be one of the first real tangible concessions that we've seen from Russia since the war started. But it remains to be seen if that part of this of these talks is really in place. And to be clear, those talks yesterday did fall way short of the U.S.'s stated objective, which was to get Russia on board with that 30-day ceasefire plan that administration officials have told us is critical to moving these talks forward. Now, we had gotten that announcement there would be this pause on energy infrastructure attacks. According to the White House readout, the next phase would be negotiating a maritime ceasefire on the Black Sea, followed by talks for a full ceasefire and then a permanent peace. We are expected those talks to happen in the Middle East, although we have yet to get a readout on a timing for that or who exactly will be involved. Of course, still big roadblocks here considering Zelensky's comments, but also importantly, the Kremlin's readout confirming that Bloomberg News reporting that Putin had made several demands of President Trump, including that he wants to see a halt of all Western weapon flows into the country. It remains to be seen if that is really something that this White House would get behind, considering, John, just last week it reversed its own halt on U.S. military intelligence and security assistance to Ukraine in order to get them on board with this 30-day peace plan.
Tyler, that's really the recap of what went on with the call regarding a ceasefire in Ukraine. But what about normalization between these two countries and the bilateral ties between Moscow and Washington?
Well, that is also something that was in that White House readout, that both leaders agreed that they want to see this strengthening in ties when it comes to Moscow and Washington. It's something that we know the Kremlin is particularly looking at when it seeks further access to Western financial markets, as an example, to counter against those sanctions that we keep seeing being that main force of deterrence that the U.S. and its allies have taken. Zelensky this morning and also last night saying that he wants to see our allies ramp up those sanctions in order to get Russia to the negotiating table in what he says would be a more serious way. Big questions moving forward here, but of course goes into this broader geopolitical tactic that this administration appears to be taking, trying to normalize those ties, potentially even to serve new reporting this morning as a potential counter to China too.
Tyler, appreciate the update. More from Tyler Kendall later on this morning. Tyler there from Washington, D.C. So just what are the objectives? President Donald Trump outlining plans to counter Russia and China.
As a student of history, which I am, and I've watched it all, the first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. We have a problem of trade where we have a very big imbalance with China. With Russia, we don't have that much trade, and they'd like to, and we'd like to also.
Joining us now to build on this conversation, Terry Haynes of Pangea Policy. So, Terry, it raises the question, just what is the ultimate objective in play here?
Well, I think the ultimate objective in Ukraine is to stop the war and in a way that allows Ukraine to continue to operate as a sovereign nation. That's going to be a very long slog. The president also talks about resetting the relationship with Russia as part of a pulling apart with China. I think he's got his work cut out for him. I think people underestimate just how much Russia is a client state of China, frankly. And beyond that, though, there's a lot of pressure points that are happening between the United States and China right now, and a lot of moves being made. And I always encourage people to see what the United States is doing with the Houthis in Yemen and the Red Sea, as well as the purchase by BlackRock of the Hutchison assets around the Panama Canal, both as part of those things. So there's a game being played that's much broader than the Ukraine matter, frankly.
So Terry, are you buying into this theory that what we see the Trump administration do is actually engineer reverse Kissinger?
I think that's a little grand, frankly. As I say, I think it's difficult to achieve, first of all, but I think what they would like to do is certainly have a reset of relationships across the board, yeah.
But if it's not to draw a wedge between Moscow and Beijing, then what is the point of normalization with Russia?
The idea, I think, is to really bring Russia back kind of in the European direction. Let's remember Russia has kind of a European face and an Asian face, if you will. And the idea, I think, is, I'm not sure what that it's even a goal, but the idea is to bring Russia back into the Western orbit, if not a Western alliance.
How much is President Trump being tested in that desire to normalize relations with Russia at a time where we are hearing reports both from Ukraine and over in the Wall Street Journal overnight saying that Russia did attack energy infrastructure essentially in Ukraine after the ceasefire was agreed upon? What are you hearing about that?
Well, that's exactly what this is, Lisa, a test. I'm not a fan of trying to be in the mind of these people, but what I can tell you from negotiations is that you've got to have a common ground in order to proceed. What Russia is demonstrating right now is that there isn't a common ground. It can of course right that ship and make it up going into the negotiations in Saudi Arabia. But if it doesn't, then both the president and the broader West are going to be faced with a choice, pretty much say, what would the West do? What are you prepared to do? Are you prepared to up sanctions more? Are you prepared to deal on the Russian frozen assets? All the things that the West has had in its quiver since the war started 3 years ago and hasn't acted upon, that choice is going to be upon the West pretty soon.
We have a pretty clear sense of what President Trump would like to see. It is peace between Ukraine and Russia, and normalized relations eventually with the United States and Russia, or greater trade ties. The way that we get there is difficult, and that, I think, is really what's under discussion. Trump spoke to the Washington Examiner yesterday and revealed that he had been speaking with President Putin on several times over the past month. Do we have a sense of whether there's consensus in his cabinet over how to go about doing this and where to sort of push and where to pull?
Well, I think there's no dissension in his cabinet. Let's put it that way, number one. Number two, I'm sure he's taking advice from Secretary of State Rubio and others. But this is not a White House that I think that looks at the negotiation strategy or tactics collaboratively. They certainly all get their opportunities to discuss, but at the end of the day, they feel it's necessary to unite around the president and have the president be seen as the sole and principal negotiator. And, you know, that's both a substance and a style point, I think.
So that raises the question, Terry, and I know difficult to assess at this point, but how close are we to a leaders' meeting, in person, somewhere like the Middle East?
Today, I don't think that's real close. Until you establish a common ground, I hesitate to say trust, but the idea is that because, you know, then you're back to kind of the whole Reagan trust but verify thing. But I don't say trust, but I do say common goals and common objectives until Russia demonstrates that it's on board with the objective here, and it has not so far. There's not going to be any hope for that.
Hey, Terry, appreciate your time as always. Terry Haynes there of Pangea Policy. I think we all want to see peace in Ukraine, that's for sure, and the president at the moment is making a big push for that. But when you agree not to attack energy infrastructure, then hours later, overnight, get confirmation from the Ukrainians that that's exactly what happened, it raises the question that Europeans have been asking repeatedly. Can you trust them?
It does raise that question. Zelensky saying you can, and there was nothing in that call that I think the Ukrainians or the Europeans walked away from that felt like it was tangible, that Putin was actually ready to make a deal of a full halt of a 30-day ceasefire, because he's saying he's not going to attack energy, and then within 24 hours, he attacked energy.
It's a real test of President Trump to see how far he's willing to go against Russia to try to get him to the table at a time where he's exerted a lot of pressure on the Ukrainian side.
As I said a little bit earlier, if you are just tuning in, big interview taking place later on this morning regarding this topic. In about 2 hours from now, we'll catch up with the White House Special Envoy, Steve Witkoff. So look out for that conversation later this morning on Bloomberg Surveillance. Up next on the program, we'll turn to the tech sell-off. Dan Ives of Wedbush as NVIDIA looks to ease concerns over big spending on AI. That stock has had a tough run so far in March. Equity futures right now attempting to bounce up 0.25% on this Fed decision day. Your bond market unchanged, 428.30 on 10s. Live from New York City, you're watching Bloomberg TV.
The Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Equity futures right now on the S&P firmer by 0.3%, on the Nasdaq 100 up by about 1/3 also. Yesterday snapping a two-day winning streak. Big tech has just been ugly, and we'll talk about Tesla a little bit later in the program, but that has been a difficult run over the past few weeks.
And it really raises the question, what's actually behind the sell-off? And you raised this earlier this morning. It is the correct one. Is it just trade uncertainty? Is it the word uncertainty that we're going to play a drinking game for? Thank you, Sebastian Page. Or is it a move away from momentum stocks purely on the basis of valuation and concerns about where the put is going to come from?
Well, Tesla got hit by everything from all sides in the last day or so. We'll catch up with Dan Ives in just a moment on this story. RBC cutting the price target. Tom Narayan coming on the program later on this morning. Also BYD. I don't think you can overstate developments coming out of China. Cutting-edge developments really starting to weigh on U.S. tech names.
That actually might be an even bigger development, I would argue, than some of the uncertainty around sales and some of the uncertainty around full self-driving vehicle equipment. I just wonder how much Tesla has the upper hand as the key technological driver in autonomous vehicles and electronic vehicles at a time where BYD is coming out with a 5-minute charger, which really rivals pumping it up with gasoline.
Lots more on that story still to come. I want to turn to the bond market just briefly. Just sit on a 10-year maturity and have a look about how it's traded over the past few days. Has hardly moved away from 430, 428.49. But I don't think it's a snooze. I think there's a load of tension running through this yield curve. Just imagine a tug of war, pulling yields down, risk aversion, growth concerns, pulling yields up. This supply story out of Germany and the inflation story around trade, a big piece of the puzzle.
I would agree with you. I think this is fascinating at a time where you're seeing risk aversion and you're not getting the commensurate response in Treasury yields. I keep thinking about what Tom Becker of BlackRock said, the idea that exceptionalism is moving overseas, and if everyone is exceptional, that means bonds are not, because that means that everyone is borrowing to fund some sort of growth. At what point, let's say today, the Fed actually comes out and says, we're going to pause quantitative tightening until we have more clarity over the debt ceiling limit. Does that cause a rally in long-term treasuries? Does the market move at all? Is that really what's dictating the direction of the bond market?
I think Secretary Bessent implied that's something he'd like to see. So let's see if we get it later on this afternoon.
It could be one of the moves. We did get a Nick Timmerow story out of the Wall Street Journal this morning about an hour ago indicating something of that nature, that they were discussing it. So watch the space.
Want to watch. That decision drops at 2 p.m. Eastern time. Equity futures then, just a little bit firmer on the session. I want to finish on foreign exchange. Euro dollar coming close to 110 in the last day or so. Euro dollar backtracking now, 108.99, negative by 0.4%. We'll get to that later. On our radar this morning, investors are awaiting the Fed rate decision at 2 p.m. Eastern time, followed by Chairman Powell's news conference. The central bank expected to hold interest rates steady and update the economic outlook with its quarterly dot plot. I touched base with Andrew Honhorst of Citi. He was catching up with Danny a little bit earlier on this morning. He thinks that median dot starts to show 3 cuts, not 2. The issue is around the rest of the forecast. Are they downgrading growth and upgrading an upward revision to the outlook for inflation?
Is it stagflationary? That is what people are going to be looking for, and how accommodative can they feel that an initial rate cut could be if it comes with a lot more slowdown, a lot more weakness, and potentially higher inflation. our drinking game, evidently, just to put the parameters out there, uncertainty and data dependency, and that essentially will be the reason why everyone will be a little woozy later this afternoon.
And how scary was that University of Michigan survey ahead of this Fed meeting? One, it comes out 32-year high for inflation expectations. If you're sitting around the Fed, that's going to scare you as they're trying to fight inflation. They thought maybe this would be an opportunity this year that they could cut. And then on top of that, consumers pulling back, anxiety about policy, and even potential. They're so nervous about spending that they might lose their jobs as well.
It scared them at the start of the hiking cycle. We'll see if it scares them a little bit later. Will they dare say the T word? Transitory.
Absolutely
Sebastian
not.
Page was with us earlier on this morning. He talked about the drinking game that used to get very drunk, looking for the word transitory.
Yeah.
They're going to mention that word later regarding tariffs and inflation.
That's been retired. Transitory will not be making an appearance. Do not wage your drinking game on that. Why are we encouraging drinking games? Don't drink water. Uncertainty and data dependency.
Not promoting alcohol.
Yeah. I think that, exactly. Just, sparkling water with a hint of lime, uncertainty and data dependency, and you'll be fully hydrated.
It's a free world. TK suggested yesterday on the phone to me that he might be having something different, but we'll see. We'll see what
Well,
TK
then I'm definitely
brings
tuning in.
a little bit later, 1:30 Eastern Time for special coverage of the Federal Reserve and a whole lot more maybe. Let's turn to Europe. EU Commission President Ursula von der Leyen pushing to boost defence spending by hundreds of billions of euros, saying the European Union needs to be able to defend itself against Russia and its, quote, irreversible path towards a war economy.
So she's going along with basically what we've been hearing out of Germany, that they need to set their own deterrence, and they're really being pushed by this White House to do so. The quote that caught me from Ursula von der Leyen today was this: if we invest these billions of euros in defense investment, we need a return on investment in Europe, aka is this a new European stimulus program they have when it comes to rebuilding their militaries?
I'm really interested in the fact that the euro is lower today, is weaker today on all of this spending discussions. On one hand, you could say it's perhaps a bit of disappointment because the Ukraine-Russia situation doesn't seem to be any closer to being resolved. On the other hand, the practicalities of some of this spending start to come to the fore. How do they do it? Who's going to build it? Over 10 years? What happens in the meantime? Who protects them now? I mean, there's so many questions as they try to double down on a long-term existential question when they're facing some short-term, fundamental strategic shifts that they've got to grapple with.
We'll see if this is a bit of a sound the news moment for the rally we've seen in both the single currency and for European equities more broadly.
Yeah, we get another vote on Friday in Germany, and maybe that'll give a little bit more clarity about how much of a sell the news event this actually is.
If you want some price action, I was thinking of TK earlier. Turkey loves the Turkish lira. You all know that. Turkish authorities detaining President Erdogan's main rival as part of a crackdown on opposition. The move triggering a sell-off in Turkish markets, with the lira falling to a record low. Dollar lira gapping out big time off the back of these headlines.
You have this Istanbul mayor. This is seen as an individual as Erdogan's most prominent rival. What we saw yesterday is authorities revoke his university diploma, which basically means he would not be able to, a requirement to run for presidency. So this is very political, which is why this is a crisis of their own making when you look at the foreign exchange market.
I would also say when you want a maritime truce in the Black Sea, given the geostrategic importance of Turkey and that choke point for global trade, who have a major role to play in implementing sanctions for Americans as well. I would say this is a big issue as well for this administration, who probably don't want that kind of instability at this point.
Absolutely. And what we saw over the weekend is Erdogan's office put out a statement that they actually caught up with President Trump, that they want to make sure that they're getting access to some American military power and make sure they have that bilateral relationship. This is going to be challenging now because America is a democracy, and what they see here is what many critics will say is that Erdogan is going after his political rivals.
It is the year of political volatility, that is for sure. I mentioned the volatility in the tech sector. Let's talk about it. NVIDIA failing to impress investors as CEO Jensen Huang lays out the future for AI at the company's annual developer conference. Huang announcing a new lineup of chips and partnerships with companies including Disney, Google, and GM.
Time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car.
Dan Eyes of Wedbush writing, quote, NVIDIA's chips remain the new oil or gold in this world for the tech ecosystem, as there is only one chip in the world fueling this AI foundation, and it's NVIDIA. Dan joins us now for more. Dan, welcome to the program. We need to talk about this name, then transition to Tesla later in the conversation. But let's start here on NVIDIA. Dan, this is failing to impress investors. What do you think the market signal is sending you?
I mean, I think it's the wrong sort of take, because I think if you look at underlying demand, I mean, we've talked about it's 15 to 1. And we have a team that's there, and you're seeing demands accelerating. And I think when you look at laying out physical AI, Rubin, autonomous, robotics, I mean, this is essentially Jensen saying it's our world, everyone else paying rent when it comes to AI. And I just think this is a stock that's going to have a 2 in front of it over the next 9, 12 months. And that continues to be the buying opportunity. I think the street is sort of misinterpreting what I believe is just so bullish in terms of the long-term outlook.
Right now it has a 1 in front of it, and it's down by close to 8% for the month of March. And Dan, I think for many people out there, it still hasn't recovered from the DeepSeek revelation of the last 2 months or so. There seems to be some scarring here. What did the CEO do to counter some of those concerns in his address yesterday?
I mean, I think it's really what Jensen's talking about is that every large company, as they're looking, whether it's GM to across enterprises, as they're looking to build out, there's only one chip doing that, and it's NVIDIA. And I think that's something where I agree there is some still scarring from DeepSeek. I continue to view that ultimately that's bullish as the models get cheaper for the longer term sort of AI revolution thesis. But I think you're seeing CapEx accelerate. It's not diminishing. And I think that's something that we'll see as it plays out over earnings. But I think investors just need more and more confidence that there's not cracks, really in this AI thesis. And I think it's actually the opposite.
Dan, let's zoom out. We've been talking today, and John raised this earlier, that something else is going on. When you look beneath the surface of the S&P 500 or the NASDAQ, it really is the high flyers of last year that are leading the way lower and haven't been able to recover even when there's been positive news. We talk about NVIDIA and yesterday's surprising reaction to the conference, but also Tesla and how those shares have absolutely been pummeled. Can you understand what's behind some of this shift away from big tech, and in particular, why certain names have gotten so disproportionately beaten up?
Yeah, I think, Lisa, there's 3 things. I think first, it's a perfect storm. I think it starts off one, you don't know the rules of the game, right? In terms of geopolitical tariffs, especially on the export controls, you're seeing a risk off, I think, globally on U.S. stocks. And I think that's something that we're seeing play out because investors are just worried that you're going to see some sort of cracks when it comes to export controls and tariffs related to chips. 2, I think you are seeing more play, like the BABAs. You're seeing that China tech trade. You're starting to see more diversification, worrying about sort of the growth concerns in terms of the macro. And the third is, you said, look, you're not going to have true valuation support here. You need to show the actual growth. And I think as we get into the next few quarters, that's the aha moment. I think similar as we've seen with NVIDIA and Palantir and others. But we're in this sort of gap here where every news is sort of going to be viewed negatively, and you just see such jitters. I think it's probably as nervous as I've seen tech investors, probably going back to some of the COVID days.
Dan, I hear you about NVIDIA, especially because the use case is pretty wide, and they've been talking about how demand outstrips supply by some 15 to 1 when you talk about some of the newer chips. Tesla's story is a little bit hairier, and you talked about the moment of truth, given some of the Doge involvement of Elon Musk. But we were talking earlier, and this might be the even bigger development, which is BYD presenting a real competitive edge to Tesla and, frankly, showing their dominance in the region. How much is Chinese technological advancement the main competitive reason why Tesla shares could stay here and even go lower?
Yeah, look, I mean, is that the biggest competition? Clearly. I mean, we're, in terms of everything BYD is doing, it's been super successful. But this is not sort of a zero-sum game. I mean, Tesla is going to be massively successful in China over the coming years. And Lisa, when I think about autonomous robotics, physical AI, who's going to own that? It's Tesla. And that's why, the medium and long-term outlook is so bright from a technology perspective and everything where they're heading. The near term, look, it's not just a moment of truth. I mean, this is something where for Musk and Tesla, it's a mini crisis that essentially they're going through, because if Musk doesn't pull back from Doge and start to show more as CEO of Tesla, then that's something that's going to continue to sort of be pressure on the stock. You need to see a balancing act. The clock struck midnight. Investors are speaking.
Dan, I'm getting a lot of messages from friends in London showing me posters that are very anti-Elon Musk, anti-Tesla across London. How concerned are you that this branding problem can metastasize and become much bigger than you're even expecting?
Yeah, look, Emma, if he pulls back and he balances it, and you don't actually see him every day in Mar-a-Lago in the White House, and especially from a political perspective, I think a lot of this is, it's a scar, but I think it's contained. I don't think it changes the longer term or even medium term outlook. But as we've talked about, I mean, the reason it's a moment of truth is you can have brand issues spread. The future is so bright. I believe it's the best disruptive technology company in the world, along with NVIDIA. But ultimately, this is really that moment where Musk needs to read the room. We've seen it before when it comes to Twitter, right? I mean, we've talked about when he was selling stock. We saw it at SpaceX. We've seen other periods over the last 8-9 years. And I think we're at one of those moments. I think the stock's way oversold for what I view as ultimately a $2 trillion, valuation as we look out in the next 18, 24 months.
Dan, I'm worried your flight might have just got caught, so I'm going to squeeze in just one more question, just quickly. How long do you think he's got before this story gets away from him at Tesla? The stock is down by 23% this month alone.
I think basically he has 4 to 6 weeks. If on their conference call or between now and let's say early May, that Musk doesn't sort of take a step back and basically he just dives into the deep end of the pool, continues to go aggressively further down, then the brand issue spread, because it comes down to the last thing you want to see Tesla become is a political symbol. That's a negative. And I think that's why this is a key 4 to 6 weeks. The clock started.
Hey, Dan, appreciate the update. Thanks for making time for us. Dan Ives there of Wedbush. That stock is bouncing this morning, up by a few percentage points, but that final assessment there, the key. And some people might say it's too late. It's already become just that.
It already is a political symbol. You had a number of Tesla models on the South Lawn of the White House. President Trump doing what President Biden did, leaning into EVs. The Biden administration, though, was union-led GM. Trump administration is Tesla. And when you look at what's going on around the world, people equate Tesla and Elon Musk politically to MAGA and this administration.
That stock is up by 3% in a pre-market. Let's get you an update on news elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Ukrainian President Vladimir Zelensky says that he'll speak to President Donald Trump today. Zelensky told reporters in Finland that Ukraine will not recognize occupied areas as Russian land. Speaking alongside Zelensky, Finland's president called for Europe to be involved in Ukrainian talks. And exclusive reporting from Anne-Marie. President Donald Trump hosted a senior UAE official for dinner at the White House as the Gulf nation pushes to ease access to U.S. technology by ramping up investments. Sources telling Bloomberg that the UAE's national security advisor spoke with Trump about increasing Emirati investment in the U.S. technology and energy. And the 2 NASA astronauts who were stuck in space for 9 months returned to Earth last night. Butch Wilmore and Suni Williams returned in a SpaceX capsule that splashed down off the coast of Florida around 6 p.m. ET. Roughly 2.4 million people tuned in to SpaceX's live stream to watch their return. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. Just want to pick up on that last story. Elon Musk is under a lot of pressure right now, but I think we all have to acknowledge this does not happen without Elon Musk and SpaceX.
They rescued these astronauts that previously couldn't come back because of a NASA spacecraft that had malfunctions. So we're happy to have them home. Welcome home and good luck with the rehabilitation.
And congratulations to SpaceX, just absolutely phenomenal. Up next on the program, waiting on Powell.
They've been pretty clear that they're on hold here. It's mostly been a sentiment data concern. You can dismiss one survey, you can dismiss another survey, but as they all gradually grind higher, I think they do worry about kind of a de-anchoring of their commitment to 2%.
Up next on the program, we'll catch up with Gennady Goldberg of TD Securities from New York City. This is Bloomberg.
in case you missed it on Bloomberg Crypto.
You have sell-side analysts taking a look at what you're doing and starting to compare you to Coinbase. Are you after their business?
Well, I think we compete in the general sense of offering crypto to customers, but also this is a nascent industry and not very many companies have entered yet. Even though Bitcoin has now been around for 15 years, institutions and other companies have been waiting for signals to enter the market.
There are a lot of financial firms that are looking to tokenize private funds also.
Yeah.
Are you in talks with any of them?
We're generally in conversations with anyone trying to do interesting things in the space. If I had to pick the biggest pain point, AI is like transforming everything. So I think it's tough right now if you want to be in the AI sector as a retail investor. There's relatively few options that you can actually invest in.
Don't miss Bloomberg Crypto live Tuesdays.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
The Fed decision dropping later on this afternoon. George Concavus of MUFG, not in a hurry to get worried. Does that make you worried? Equity futures right now in the S&P positive by 0.2%. Out of Savannah this morning, we're all waiting on Chairman Powell.
They've been pretty clear that they're on hold here. I think the data they've gotten since, given, even subject to the uncertainty, I think that they think that this is a good level to stay at, given that the labor market appears pretty firm. It's mostly been a sentiment data concern. The inflation expectations are shifting up. I think you can dismiss one survey, you can dismiss another survey, but as they all gradually grind higher, I think they do worry about kind of a de-anchoring of their commitment to 2%.
So here's the latest this morning. Investors are awaiting the Fed's rate decision and economic projections as slowing growth and trade uncertainty weighs on markets. Gennady Goldberg of TD writes, market sentiment moved from euphoria to despair so fast it's given investors whiplash. While the data has become concerning, the economy is still doing okay and shows signs of moderating. Gennady joins us now for more. It's good to see you, sir.
Thanks for being here.
If he says exactly that today, is that hawkish?
I think so. I mean, you were looking at that 10-year rate right around 430 and saying, look how stuck it is. I think if he sounds dovish, we get right to 4%. If he sounds hawkish, we can back up pretty significantly. The market's been pricing in a lot of, Fed action, so to speak. If he comes out and says nothing, I think we go back up to 450, 460 in a hurry.
Hold on a second. On the short end or on the long end?
On the long end.
Okay, but isn't that counterintuitive? Because some people are actually growing increasingly concerned about longer-term inflation with the expectation that you've got debt issuance around the world, let alone deglobalization, et cetera. You're saying that if they sound somewhat hawkish or at least not ragingly dovish, you could get a backup on the long end? How does that make sense?
I think the market is so much more worried about growth than inflation right now. I mean, we're all talking kind of stagflationary impulses here. I do think the Fed, if they face any sort of growth slowdown, will be pretty quick to act. But I think at this point, they're going to pour a little bit of cold water on the market's expectation that they're going to come in, effectively tomorrow and start cutting interest rates. They're still in wait-and-see mode, and that could push the long end of the curve a little bit higher.
Watch what they do, not what they say. That's what people are saying right now when you have a drinking game around uncertainty and data dependency.
Now you want to drink again.
Cheers.
There you go.
Some hot water. There is a question, though, about how much they're going to give us signaling with quantitative tightening. And I keep going back to this because ultimately we've heard about that from Scott Bessent, the Treasury Secretary. We've heard that potentially they could start to pause the allowance of their balance sheet to roll off, their lack of reinvestment, as a way to sort of ameliorate uncertainty around the debt ceiling. What do you take of that type of move if that does come?
I think they'll try to sell it as, this is completely technical, don't read into this. I think part of the issue is the markets are going to have trouble divorcing that from, interest rate policy. The Fed has always said that it's two different programs. Our view is they can still wait a little bit. So our view is they don't have to actually cut QT here. They can wait until the next meeting or the meeting after. We actually think QT is going to run all the way until September before they end, with a little bit of a risk, obviously, to them ending earlier. I think that discussion has already gotten the markets a little bit, optimistic, I would say. Scott Bessent would love to have QT end today because that's $300 billion less a year that the Treasury has to fund. I would say it's more likely than not that it still stays in place for now. They've got plenty of time until that August X date. I don't think they need to rush. They could do it in June, they can do it in July, heck, they can even do it in September.
The Treasury Secretary sat in your seat and said exactly the same thing, by the way, so he essentially alluded to that. Let's get to the forecast. Median dot shows 2 cuts. Does it show 3, 2, 1? What does it show at the end of today?
I think the risk is that it goes to 3. I mean, we've actually got it still showing 2. I think that conversation around inflation versus growth is really what everyone's nervous about. And I wouldn't be surprised to see some of the dots actually move higher, not lower. So I think the expectation is the dots all shift universally lower because of the worry about growth. There's going to be some Fed officials who are worried about inflation, and there's a good chance the median actually stays around 2. Some shift lower, some shift higher, and we don't get a lot of movement.
The biggest risk, I think, for markets today, and we're all trying to game this out, if you get a stagflationary outcome in the revisions to the forecast and a Federal Reserve that just looks dazed and confused, that helps nobody.
Well, it helps nobody who wants a Fed put, but anyone who's looking for a Fed put, well, good luck. I feel like the bond market maybe has moved away from the idea of a Fed put a little bit. The stock market still held out hope and might be the one most susceptible to disappointment today.
Do you think he's worried about what's developing in markets, or it's just not big enough? Not yet.
I think they're watching it closely. I think, scope certainly matters. I think the timeline matters as well. I mean, if you have a 15 to 20% fall in risky assets over the course of a couple of weeks or a month, that's certainly concerning. If that happens over the couple of months or a quarter, that's something to keep an eye on. What we're really watching is the impact of this fall in equities on higher income consumers. They have been the driving force of this economy for the last couple of years. They are the reason the economy's outperformed all expectations. If they snap their pocketbooks shut, I think that's severe. I think that's what markets are trading right now. We've been taught before, don't bet against the American consumer. Not yet. I think there's a lot of nervousness, but the data is not there yet.
That would be a major change. Gennady, appreciate your time as always. Gennady Goldberg there of TD. Up next on the program, Mohammed Al-Arian and a whole lot more from New York City. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever. S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
The countdown is on. Everything you need the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Things aren't as bad as we've seen over the last 2 months. This shock, kind of loss we've seen in some of the U.S. equities seems a bit overdone.
Right now, we're just in the wait-and-see mode, the inaction, waiting to see where the chips fall.
I think we tip into recession far faster than people think, and maybe we're already at that sort of stage.
The next few weeks, the next few months are up for grabs. Just to be on the lookout for more volatility.
Don't wait for the narrative to shift. The markets will respond first, and investors will try to kind of catch up to where markets are going.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now. Let's check out the scores. Equity futures on the S&P 500 firmer by 0.2% on this Fed decision day. On the Nasdaq 100 up by a third. In yesterday's session, snapping a two-day winning streak. We bounced back just slightly. Going into the big one a little bit later. Your day ahead looks like this. The main event, 2 p.m. Eastern Time. It is a three-part act, a decision. Widely expected to be no change. The forecast. We're expecting a lot of change. And then 30 minutes later, a news conference with Chairman Powell.
What can he say that can give this market comfort? We're going to cut rates. Does that give the long-term bond market comfort that we're not going to cut rates? Does that give the equity market comfort? What does a Fed put like when you have potentially stagflationary-like environment coming down the pike? There are no good decisions for a Federal Reserve in that type of environment. So it's difficult to know exactly how the market will take what we're going to hear, which is uncertainty and data dependency.
They've got some new policies to respond to, some new policies to deal with, some new policies to build some forecasts around, some new policies to react to in a press conference later.
They do. There are tariffs in place, additional tariffs given under Trump 2.0, 25% on steel and aluminum, 20% on Chinese imports, and then there's the uncertainty, as the word of the day, about what tariffs are coming down April 2nd. And not only that, Paul Donovan of UBS talks about it's not just the April 2nd tariffs themselves. It's the breadth and scale of those tariffs, the second round effects, the consumer reactions, and the retaliation. That's why it makes the Fed's decision today so much harder than they were dealing with tariffs in Trump 1.0.
If you follow all these speeches from various committee officials on the FOMC, not in a hurry is something that comes up repeatedly. They are not in a hurry. What are they waiting for?
A sign that the U.S. economy truly has slowed down. The bigger concern right now is if you get a recession, what's the valve for the Federal Reserve? You could get rate cuts that could be significant that might alleviate some of that pressure. If you get a slowdown, it becomes a very difficult moment for them. How do they respond to a slowdown in the economy that isn't a full contraction while inflation is still sticky or potentially even picking up? And because the U.S. economy is slowing down, it becomes that much more challenging to repay all of the debt at a time where inflation is still high. Stagflationary-like environment are very difficult for Federal Reserves.
Markets aren't used to this. No one's holding their hand. The Federal Reserve right now is not in a hurry. And there have been real signs of a slowdown. They're not in a rush. Got it. The administration is not panicking. They're not concerned about the correction we've seen in equities. That's a new regime for a lot of people in this market.
Where is the put going to come from? And a market without a put is a market that has been unconditioned for this type of environment for over the past 15 years, when it has been all driven by monetary and fiscal policy. You have to look to real growth. And right now, the signs are just really mixed.
And when it comes to what this administration is looking at, they're just calling this right now a detox, a transition. They're really struggling to say we are on course potentially for a recession. But it puts them in a very difficult place, because what if Jay Powell talks about not cutting this year? What kind of tweets, truths, or statements will we get from this president?
That decision drops at 2 p.m. Eastern Time. Going into it, equity futures firmer by 0.2%. The next hour looks like this. We'll be catching up with Mohammed Al-Erin of Queen's College, Cambridge, on risk to U.S. exceptionalism, Norman Rall of CSIS with President Putin shunning a 30-day ceasefire, and the former Kansas City Fed President Esther George counting down to that FOMC decision later on this afternoon. We begin this hour with stock steady ahead of that decision coming at 2 p.m. Eastern Time. Mohammed Al-Erin of Queen's College, Cambridge, writing the following: the Federal Reserve's ability to significantly cut interest rates due to employment and growth worries may be constrained by unfavorable inflation dynamics. It's too early to be confident about the U.S. economy's destination. Mohammed is with us for the next 2 hours and joins us now. Mohammed, good morning.
Good morning, John.
That's the important quote. I think really, really important. If downside risks to growth mount, do they also have to confront upside risk to inflation? How constrained is their ability to respond? Just how constrained are they?
It is constrained. The Fed, like so many others, are navigating a regime change. And we're seeing it in fundamentals, we're seeing it in technicals, and we're seeing it in valuations. And for them, the regime change involves three things: postpone rate cuts, and then communicate in a way that convinces people that you will have the possibility of rate cuts, not because inflation is coming down, the so-called good news cuts, but because growth is problematic, bad news cuts. And then the third one is do so without fueling inflation expectations, which already are pretty worrisome. So that is what they need to do.
Today's a three-part act. The decision is expected to be a non-decision. A lot of people will go straight to the forecast. What will you look for in the forecast today? And do you see a real risk of seeing a stagflationary mix to the revisions from the forecast we saw back in December?
So let me tell you what would worry me. The first thing that would worry me if suddenly they do what they did on inflation in the past, which is start changing the definitions. In the past, they've told us they really care about the survey data on inflation. If suddenly they say, we don't care about the survey data, we're going to the market-based data. So if you see the goalposts moving yet again on the data, you know that they are not confident as to what they do. That's the first thing. The second thing is they can no longer maintain that we don't speculate, we don't guess on policies. They have got to take a view. And I suspect that they will be tempted to be data dependent, and if they're tempted again to be data dependent, the risk of a policy mistake is much higher.
Data dependency is something that gets thrown out a lot, but it's becoming less and less clear to me what that means. Not only because there are a lot of sources of data, but is it the data as far as the U.S. economy, or is it the data in terms of fiscal spending overseas and how much that might pressure the global market in terms of where the demand goes and how that leads U.S. Treasury yields? I just wonder how much they are constrained also by the borrowing plans of Germany and China at a time where everyone seems to be engaging in fiscal spending.
So they are, and that's why I said we have three regime change. The fundamentals is we've gone from U.S. exceptionalism to doubt about U.S. exceptionalism. The technicals, we've gone from huge confidence in a Trump put and a Fed put to questioning both. And then the valuation is we've gone from the U.S. dominates in all states of the world to the U.S. no longer dominates in all states of the world. These are three massive regime changes. And you mentioned the word uncertainty. No wonder there's uncertainty. Because these are fundamental changes to how people think about economic outlook and how people think about investing.
I was looking last night at where the markets were the last time that the Fed met, the last time that they announced their decision on January 29th. And the 2-year yield was a little bit higher. The 10-year yield was a little bit higher. The euro has surged and gold has surged. And I wonder how much that speaks to a real shift in this idea that the Fed has, to use John's word, the privilege to act recklessly with borrowing, that the Fed wouldn't have to address that suddenly that has to actually become something that the Fed thinks about.
So I think the gold issue is really important. And you've heard me argue here, people cannot escape the dollar as a reserve currency. But they can start slowly doing two things. One is building pipes around it, and two, changing their asset allocation to include a little bit of other things. And gold is one of the other things. So this should be flashing yellow in Washington here, that if gold continues to go up, regardless of all it's broken down all its historical correlations, there's something going on about the dollar internationally. And that's something that they have to take really seriously.
When you say that they should have other things in their portfolio besides just gold, maybe central banks, what else?
So you see the shift. You see suddenly crypto has become more acceptable institutionally, which was unthinkable just 2 years ago. You see the dollar. You see investors now say diversify away from the U.S., diversify away from the U.S. So whether it's the household sector, the corporate sector, or the sovereign wealth funds, they're all looking for an alternative. Now, the good news for the U.S. is you cannot replace something with nothing, right? So there is no other currency that steps in, and that's why that shift is going slowly, but we don't know where the critical point is, and that's why the U.S. has got to be careful.
You've written about this before. What do you think started this process? What's this the biggest consequence of?
2008. So 2008 was a crisis manufactured in the U.S., and it undermined the implicit contract between the U.S. and the rest of the world. The implicit contract is simple. We give the U.S., we, the rest of the world, give the U.S. enormous privileges. You're the reserve currency, meaning you issue bits of paper and we give you goods and services. We outsource your savings to you to manage because you've got the deepest and most predictable financial markets, which means your interest rates are lower. We give you veto power on critical decisions and on and on. But in return, the rest of the world expects the U.S. to manage the system responsibly. And what's been eroded is this notion that the U.S. manages the system responsibly. It started in 2008. It accelerated in 2016. And now, with the weaponization, the further weaponization of trade and investment regulations or sanction, it's accelerating again.
That's the ironic part of the sanctions regime, that they're trying to punish people who have been irresponsible, but then people are questioning the responsibility of U.S. policy. What do you do with sanctions policy? Because Secretary Besson has talked about this repeatedly, that he'd like to see a different approach, that the president would like to see him engage in a different approach with sanctions policy. What do you think would be more helpful? What do you think needs to change?
So I think you need to think, and that is my bias, you need to think in game theory, because game theory forces you to first decide what type of interaction am I in? Do I want it to be a cooperative interaction or do I want it to be a non-cooperative interaction? Second, how long will my relative strength persist? And third, how many rounds are we playing? The difference between 2017 and now is that in 2017, the rest of the world thought that the US was playing one round. Now, the rest of the world, this is a multi-round. And when it's a multi-round, the other side adjusts. And that's why the U.S. has to be really careful about the longer-term consequences.
Treasury Secretary Scott Bessent recently was talking about, at least when it comes to Russia, President Trump is willing to let him go to a 10 when it comes to sanctions if it means getting these individuals, President Putin, to the table. But do you even think a 10 would work? Do sanctions actually work?
So first of all, the question is, why aren't we at the 10 already?
Because the Biden administration didn't want higher energy prices.
Right. And the problem with that is you give countries time to adjust. And now Russia has an alternative trading system that doesn't use the dollar. It involves 4 other countries, and it's working. It's not efficient. They pay a huge premium to use it, but they have an alternative system. And the problem with not going to 10 quickly, because you don't want to incur the cost of 10, is that other countries get to adjust. And now, when I go around the world, people are asking me, how does Russia do it? How do they avoid the impact of sanctions? And that's not the question you want to be asked when you go around the world.
And that's the question you hear a lot. Mohammed, appreciate your time. Going to be sticking with us through this morning. The Federal Reserve decision a little bit later on this afternoon. Mohammed Al-Erin of Queen's College, Cambridge, will be sticking with us. Speaking of gold, very close to all-time highs and still north of 3K. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. A check on General Mills falling 3 1/3% in the pre-market. The food manufacturing cut its full-year sales forecast. That coming amid continued uncertainty surrounding U.S. import tariffs and potential retaliatory tariffs that could be implemented by other countries. Elsewhere, Bank of America strategists are warning that China's stock rally may see a meaningful correction soon. The Hang Seng China Enterprises Index and the MSCI China Index have both surged at least 30% from January lows, showing, they say, similarities to the 2015 boom and bust cycle. The FBI is investigating a number of incidents across the country where Tesla charging stations, dealerships, and cars were damaged. That includes an incident in Las Vegas where cars were seemingly shot at and then set on fire. This after President Trump suggested that he would designate acts of violence against Tesla as domestic terrorism. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. This is really sad to see this. You're free to purchase or not purchase whatever you like. It's a free market. It's a free economy. It's a free country. But to damage things in the way that things have been damaged, the act of vandalization that we've seen, vandalism over the last few days has been pretty much unthinkable a number of months ago regarding Tesla and Elon Musk.
Vandalizing anything is illegal. It should be held to that standard. It should not be celebrated in any way. And frankly, it is not an acceptable way of speech.
Tesla, at the moment, just about firmer in a pre-market, following a pretty aggressive sell-off through the month so far. Up next on the program, a ceasefire out of reach.
The ceasefire, without going a little bit further, would have been tough. Russia has the advantage, as you know. Putin actually said to me, if you're my friend, I'd hate to see you as my enemy.
Norman Rule of CSIS joins us next, live from New York City. This is Bloomberg.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Equities a little bit firmer here, up by 0.3% on the S&P 500. The bond market just about unchanged. 10s at the moment, 429. The euro backtracking, negative by 0.4%. A break of 109, 108.98. Under surveillance this morning, a ceasefire out of reach.
The ceasefire, without going a little bit further, would have been tough. Russia has the advantage, as you know. It could be we could end up in World War III over this, which is so ridiculous, but, you know, strange things happen. And I think we had a great call. Putin actually said to me, if you're my friend, I'd hate to see you as my enemy.
So here's the latest this morning. President Trump and Russian President Vladimir Putin failing to reach a ceasefire deal in a 90-minute phone call. The Ukrainian President Zelensky saying he'll be speaking to Trump later on today. Bloomberg's Tyler Kendall joins us now from Washington for more. So Tyler, let's just take a step back. What's the state of play now after what we've heard from Zelensky, Putin and Trump in the last 24 hours?
Well, John, Zelensky announcing this call new this morning and also saying that he will ask the U.S. and its allies to start to exert more pressure on Russia in order to get them to the negotiating table. For example, Zelensky has floated that he would like to see a tightening of sanctions, something that the U.S. really hasn't ruled out but comes on the heels, as you heard there, President Trump saying that this call was really a positive step. We also got a new headline this morning from the Kremlin that says that the U.S. agreed to, quote, gradual normalization of ties with Russia, something that we know Moscow has been at and has been looking towards. But there's still really some big questions here about what exactly was agreed upon in that call after Zelensky confirmed that it appears Russian drones had hit Ukrainian civilian and energy infrastructure overnight, which wasn't supposed to happen, according to really the only true tangible deliverable that we did get from that call yesterday. Now, what happens next here? Zelensky and Trump will hop on this phone call. We'll wait to see what that readout says. But at this moment, we are still expecting negotiations to move ahead as planned. We haven't heard otherwise. Special Envoy Steve Witkoff did confirm yesterday that those talks are expected to take place this Sunday in Jeddah. As we wait for further details on what could be discussed, John, just quickly, I want to add that this morning Zelensky did say that he was hopeful that a peace deal could be reached later on this year, but he said that he needs to know what those firmer security guarantees will be. The Kremlin this morning saying that potential peacekeepers were not discussed between Vladimir Putin and Donald Trump. It remains to be seen, those big questions about what the White House will commit to when it comes to that lasting peace and those firmer guarantees.
Hey, Tyler, appreciate the update. Tyler Kendall down in Washington, D.C. with the latest. Let's extend the conversation now with the former senior U.S. intelligence official Norman Rule of CSIS. Norm, welcome back to the program, sir. We were talking about objectives earlier on this morning. Do you think the push for peace in Ukraine runs parallel with a push to normalize U.S.-Russia relations, or are the two things separate?
Good morning. I think what we've seen is a first step in each direction, and there are a few surprises in what we've seen from this first conversation. We've seen the beginning by the Russians to test the Trump administration. We've seen the Trump administration to test the Russians, and this will likely be a long series of talks. The Russians are going to try to seek sanctions relief. They're going to put forward maximalist demands regarding Ukraine. The Trump administration will start to pressure the Russians for efforts against Iran, to look for some cooperation on China, perhaps, or even North Korea. In the long term, we do need to have arms talks with the Russians on missiles, on space, even talks on the Arctic, on dealing with the military situation there. So there are reasons for negotiations and a relationship with Russia, but the Russians are going to play the long game here.
Norman, when it comes to what was agreed yesterday, we're talking about ceasefire on Russia attacking energy infrastructure. But less than 24 hours that those statements went out from the Kremlin and the White House, we saw Russia hit energy and other infrastructure like a railroad station in Ukraine. Does now this give a little bit more credence to the Europeans who are telling the administration, be careful, you cannot trust President Putin?
Well, Russia, like Iran, always negotiates on that which it has negotiated. And I think Russia would likely say when the agreement begins is up to question. But I'm not sure Russia ever agreed to stop firing on infrastructure. They did agree to cease fire on energy. They would like to see the Ukrainians cease similar issues because the Ukrainians have been quite successful in striking significant portions of Russia's energy infrastructure. This said, the Russians have broken a number of agreements in the past. I think the Trump administration will be reluctant to impose significant sanctions on Russia, but will do so if Russia compels this. And I think Russia doesn't want to see that to happen. So Russia's got a balancing act here. They want this relationship with the United States. They want to erode America's relations with Europe. They need to make sure that America isn't pushed in that direction.
Norm, when it comes to the timeline, Tyler was just talking about how Steve Witkoff said yesterday that the negotiations will begin Sunday. When do you think we could see President Putin and President Trump actually sitting down together?
No idea. And it's because each side will want to play such a meeting as a significant breakthrough in relations. Russia is already ensuring that its propaganda machine shows that any encounter with the United States is seen as a win for Russia, as a significant improvement in Russian-U.S. relations. And they hope that the world parrots this in repeating this dialogue. But for the United States, they've got to come from this meeting with something more than a temporary agreement on a small portion of a ceasefire.
Norm, you said that Russia is testing Trump and Trump is testing Russia. How is Trump testing Russia?
Well, President Trump has got to see if he can gain a genuine end to this conflict, or at least the beginning of a process that would move in that direction. This is going to be difficult and unpleasant and heartbreaking for many. It will include likely Russian control of Ukrainian territory. It will include likely Russian an end to sanctions on Russia, and it include Russia's return to a better relationship with the United States. That will be opposed by many. The president is going to look for some way for Russia to prove that that price is worth it. And we did see after the first talks in Riyadh, Russian Foreign Minister Lavrov go to Iran to press them on the nuclear program. Now, the Russians have very little influence over Iran, and the Iranians don't accept much Russian push in that regard. But it is an example of the United States pushing Russia in the direction of something that we seek them to do against our adversaries.
Norman, expand this a bit. In the past, you've referred to Russia being a client state of China. How should the White House think about that, and to what extent is there scope for eroding the link between China and Russia right now?
I'm not sure there's significant scope for that to happen. The relations are economic, as you know, Mohammed. The relations are deep. The political engagement that the U.S. would seek perhaps at the United Nations is superficial. The pressure regarding Iran by China and Russia is both really minimal. I'm really not sure what the administration could achieve regarding China in the near term. I think it's more likely we could see progress on, as I say, arms talks restarting, some sort of symbolic pressure on Iran or North Korea, some sort of symbolic talks on the Arctic, some sort of cooperation on energy. But China is going to be a very, very long game.
Hey, Norman, appreciate your personal assessment on things, as always. Thank you, sir. Norman Rule there of CSIS. On that last point, the question that Mohammed raised, the president alluded to that in a conversation yesterday evening.
He said that you don't want to see Russia and China get together. Well, the fact of the matter is Russia and China are already together. China treats Russia as a penal colony, and it's basically its gas station. And on top of that, they have talked about no limits to their friendship. How do you drive a wedge into that? Which is why a lot of individuals in the foreign policy world think that what Trump is trying to engineer is a reverse Kissinger. Draw a wedge between Moscow and Beijing. But to Norm's point, it's going to take years.
Is that achievable? Just how difficult is that going to be?
Especially if you have that economic independence. I'm just keying in on this idea that President Trump is testing Vladimir Putin. I want to understand exactly how. What are the nodes of that test? What are the asks? Because right now, I don't have a lot of clarity on that.
We can ask that question to the White House Special Envoy later on this morning. About an hour from now, we'll be catching up with Steve Witkoff on this program, live on Bloomberg Surveillance at 8:30 Eastern Time. Equity futures on the S&P firmer here by 0.3%. Up next on the program, we'll talk about the stock market going into the Federal Reserve decision later on this afternoon. Phil Camporelli of JP Morgan Asset Management joins us next.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
The opening about 2 hours away. Equity futures on the S&P 500 firmer by 0.3%. On the Nasdaq 100, what a difficult ride it's been over the last few months. Looking at the Nasdaq this morning, up by 0.36%. With 2 hours until that cash open, let's get you some morning movers. Here's Yahara Hackers. Hey, Yahara.
Hi, John. We start with Tesla getting a boost here in the pre-market, up more than 2.7%, putting it on track to snap a 2-day losing streak. And this is after it was approved for a permit in California that could put it closer to launching a ride-hailing service in the state. And of course, that's important because it could pave the way for Tesla to launch for its ultimate goal of launching a robo-taxi service. Next up, we have shares of Gilead Sciences. Those are falling 2% now, and this is on a Wall Street Journal report that the U.S. Health Department is weighing plans to cut spending for HIV here in the U.S. Gilead, of course, is a major HIV drug maker, yet analysts are saying this would not be that big of a hit to Gilead. Still, as we can see, the negative headline is weighing on the stock. And last up, we have Venture Global. Those shares are rising 8% after we reported that the Trump administration is set to grant the company approval to export natural gas from a planned facility in Louisiana. And this is a project that was stalled under President Biden, but of course, with a new president determined to drill, baby drill, the approval would be Trump's biggest move on LNG yet. John.
Yahara, thank you. Appreciate the update. More from Yahara a little bit later on this morning. On our radar this morning, some top stories for you. The Trump administration firing 2 Democratic FTC commissioners from the 5-person agency. The FTC chair, Andrew Ferguson, who was nominated by President Donald Trump, defending the decision.
What you see the Trump administration do is basically embracing this legal theory that the Constitution gives the president unconditional authority when it comes to managing the executive branch. When the FTC and commissions like this are set up, though, they're set up in a bipartisan way. Now what you have at the commission is just 2 Republicans when it's supposed to be balanced. The issue becomes here. Paul Donovan running this in UBS this morning. If this is successful, this might become a president that could challenge the political independence of something he cares about, Jonathan, the Federal Reserve.
It's what I thought of too. It's what a lot of people thought of. What does this mean for the Federal Reserve? Do you remember that news conference, Chairman Powell?
No.
Can't be fired? No? It's just so blunt, wasn't it? It was so blunt. Does that raise some fresh questions about whether that's true?
Right now, it doesn't seem like that's up for grabs, given the fact that Scott Bessent has talked about how they have lunches together and that they seem to be working cordially together. There are these political questions. I was just wondering, do we have a clear sense of what that means for the antitrust view about what they're going to allow or not? I mean, honestly, like, let's just put aside the politics for a second. Does that leave us with a clear sense of what the FTC is going for in terms of what it's going to sign off on or not?
My turn to say no. No. Because what we saw yesterday was great speculation about a deal not taking place because of the antitrust concerns of people coming from this party.
We've seen it time and time again. So far in the 8 weeks of the Trump administration, there are synergies, and even Trump 1.0 when it comes to big tech, there are synergies when it comes to antitrust between Democrats and Republicans, especially the likes of former Senator J.D. Vance, who's now the vice president.
Plenty to talk about. in that regard. I want to get to this story, though. Morgan Stanley planning to cut 2,000 jobs later on this month. Sources telling us here at Bloomberg the plan was set in motion before recent market turmoil. This is Citi cuts payouts to hundreds of top executives tied to the bank's turnaround plans.
Two different stories. For Citigroup, it's the consequence of a $6 billion to $81 trillion fat figure, perhaps, that it limits some of the progress that they're making toward some of their compliance issues and concerns about regulators. For Morgan Stanley, there was one line that stood out to me that I thought was fascinating. A small portion reflect the impact of artificial intelligence and automation inside the firm, a proportion that's expected to increase over time. How much is that going to drive some of the efficiencies on the financial markets?
That's going to feed anxiety about unemployment, not just on Wall Street, but beyond. And we've seen that anxiety, Mohammed, climb over the last few weeks. It was in the sentiment survey from you, Mitch, on Friday as well. You look at the headline numbers for the labor market in America, things look steady. You go to the surveys and things look weak. What's the difference between the two at the moment?
Time. Just give it time. A lot of the survey data needs 3 to 6 months to be translated into the hard data. But this is consequential because the lower parts of the household income sector have been under pressure, but overall consumption, overall growth has been supported by the rest of the distribution. Now, if we can get income insecurity among the rest of the distribution, that has a potential demand effect.
And that's exactly what we heard earlier this morning. This economy's been very resilient over the last several years in a way that a lot of people underestimated. And one of the reasons, not the only reason, but one of the reasons, high-income consumers in America have kept on spending. They keep on spending. Will they stop?
Especially if the wealth effect takes hold, where suddenly their valuations are falling. I would add, the other reason why consumer spending is held up is because people basically got checks from the government that they went out and could spend. And so you do wonder, as that gets pulled back, what that leaves behind in terms of scars that hadn't previously been addressed.
We'll get more labour market data for you tomorrow morning. Jobless claims just a day away. Let's squeeze in tech. NVIDIA failing to impress at its annual developer conference, even with CEO Jensen Huang making several big announcements. The chip giant unveiling a successor to its Blackwell Ultra processor, a partnership with GM, and a whole lot more, and that stock was still weaker.
The magic of the Godfather in a leather jacket of artificial intelligence seems to be waning, and the concern of that seems to be bleeding out beyond just the Godfather himself at NVIDIA shares, which fell after this announcement, which widely was thought to be a pretty positive one. It also is companies that mention NVIDIA. It used to be that was the secret sauce. You mention NVIDIA, your shares pop, and now it's not working. And even GM, where they talked about a partnership with them, it didn't allow those shares to rise at all, even though suddenly you have the promise of robo-taxis that once upon a time was a story that this market loved. And so this is the reason why you have to wonder what's behind this. Is it a true questioning of AI, or is it something just momentum-driven that is market-based?
All of the above, but post-DeepSeek, this company's been on the defense. And it's not on the offense like it was only a few months ago. That stock is down so far for the month of March. Most of the Mag 7 is down pretty hard through the month of March. Markets looking for the Fed's read on the economy, and markets too. Phil Camporelli of JP Morgan writing, we acknowledge the downside risk to growth, but are stopping short of recession. Tariff policy and uncertainty was a clear risk, but to go underway, I believe you would be ignoring the potential upside, the administration delivering pro-cyclical deregulation and fiscal policy. Phil joins us now for more. Phil, welcome to the program. We have heard this so many times on this program, that the strategic anchor for the bulls, when they take a step back and think about the overall policy mix, they believe it's pro-growth, pro-risk. Where does that faith come from?
Yeah, John, you know I always love starting my morning with you guys, but I really, really like starting the morning when the multi-asset diversification story is working. I have to tell you. Like, this is unbelievable.
Did you rehearse that last
night? John, I've been working on that line the whole way in, John. So let's just break this down.
Carry on. Don't let me spoil it.
Let's just break this down for a second. So first off, yes, the shine has come off the U.S. exceptionalism story. When you think about U.S. exceptionalism, you think about a couple of things: U.S. growth outpacing the rest of the world, rates in this country, moving higher, or, Chair Powell being more patient with cutting rates versus the rest of the world, and then fiscal. And when we got the new information this year, we have certainly changed that view. And you've heard me come in here a lot talking about U.S. exceptionalism. On the growth side, when we heard Scott Bessent in February say, this administration is focused on lower rates, that was code for the tariff uncertainty is coming. And I think that's the biggest issue. It's not really tariffs. I think this year has been more of a valuation story than tariffs. It's been the uncertainty of it. You know, it's like when Jamie Dimon says he could deal with financial regulation as long as he knows what it is. And just knowing what tariffs are, maybe you could be a little bit more agile there. But yes, the shine of U.S. exceptionalism has come off. Rates, I feel like Jay Powell and Christine Lagarde have swapped scripts, right? I feel like Christine Lagarde was talking about becoming, you know, having easier policy, and Jay Powell was talking about patience. Those things have flipped. And then the fiscal, I think that's the one that really caught our attention, John. Like U.S. exceptionalism with fiscal policy, up until Germany breaking their constitution a couple of weeks ago. Do you just put that at the German plan into perspective?
By Daniel Priestley.
It's about 11% of GDP, 500 billion euros on a $4.5 trillion economy. Do you realize that that's the same percent of GDP as the U.S. coronavirus response? So they're responding fiscally in the same size and scope as we did to a pandemic. But the key is this: we are certainly stopping short of a recession. This economy is operating from a position of strength. We were growing at 3% most of last year. The labor market, you mentioned claims. The unemployment rate, 4.1%, very strong. So we're stopping short. However, we have taken down our growth. So growth from 2.1 to 1.9%, 1.7%, and our probability of recession from 15%, which is about as low as you could possibly have it, to 20%. And again, a multi-asset investor, Lisa's favorite asset class, bonds, are finally working to protect.
Okay, hold on a second. There's a lot to unpack, and I just want to say, whatever you're drinking, fantastic. I'll have one too. There is this question.
It's just coffee, just to be clear. It's just coffee.
All right, good. I'm glad to hear that. It's still early. There is a question about whether the U.S. is losing exceptionalism or the rest of the world is gaining exceptionalism, and why bonds haven't acted more as a diversifier against some of this slowdown as you reverse downward some of your growth expectations. How concerning is that to you that going forward, the U.S. bond market's going to be really stressed not just by a question about U.S. dynamics and inflation, but global debt issuance and global exceptionalism with everyone trying to get on that train?
Yeah, so we believe that bonds going from 4.8 to 4.3 is pretty meaningful in the U.S. on the 10-year note. That's 50 basis points. And the bond market being higher this year with the equity market being lower, I think that's meaningful. We are also, though, saying don't believe in a Fed put here. A Fed put, if the Federal Reserve were to accelerate their action, be careful what you wish for. I think that's a world of a deteriorating labor market and obviously deteriorating growth below the 1.7 that we're predicting. And that's when bonds would kick in. But 4.3 for us in a world of nominal growth, I said 1.7 on real growth and about 3% on inflation. That brings you to 4.7% nominal growth. 4.3 isn't particularly enticing for us, but the move from 4.8 to 4.3 is clearly a risk, is clearly offsetting the risk that inflation is not the problem anymore. It's growth.
I'm impressed by your very high level of conviction.
Yes.
I just wondered whether it's matched by a high level of foundation.
Yep.
So let me ask a couple of questions. A revision from 2.1 to 1.9.
1.7, yep.
Okay. Yep. At the beginning of the year is relatively small given all the things you cited about uncertainty.
Yep.
Second, the phrase, we will certainly stop short of recession. Certainly. That's a very strong statement.
Yep. So 20% probability of recession. The lowest we could possibly get, Mohammed, is 15, just in terms of the law of averages. We do a business cycle indicator when we look at things like exuberance. And I think the consumer, again, we were talking about the consumer a couple of minutes ago, Mohammed, they're still paying 4% on their mortgage rate. The effective mortgage rate in this country is 4%. I think that's the biggest reason why we didn't go into recession in years like 2023, why there was no lagged effect of policy. And as long as the labor market continues to show strength, which I think we're seeing, and that debt service costs stay low, I think the consumer is okay. And also, we've reduced our allocation to equities. Like we didn't get to the positioning. We came into the year 10% overweight equities, all in the U.S. Now we're 4% overweight equities, so we cut it by over half, and we're focused much more on developed non-U.S. Our U.S. overweight is only 1% right now. Okay, and the other piece, Mohammed, is high yield credit. High yield credit is the no recession trade, and to have an asset class yielding between 7 and 7.5. versus the core bond part of our index yielding much lower than that in a no recession environment, I think is really critical. So certainly maybe a little bit too strong, right? There is a 20% probability of recession, but to make the leap of taking the shine off U.S. exceptionalism to go to recession, I think is premature.
No, not going to recession is certainly a bit. I mean, my own probability is 25 to 30, so we're not far away, but I wouldn't say certainly. But what do you do with the survey data? Do you simply dismiss the survey data? Do you say it's a hiccup? How do you treat the survey data? Because the survey data is pretty worrisome.
Yeah, so soft data versus the hard data, I think, is what you're getting at. And the Michigan confidence number on Friday was awful, right? Not only with the confidence number, but also the inflation expectations. It's almost like they crossed the bridge in Detroit into Canada and started asking people about the
it was
Michigan
online.
confidence.
It could have been.
It could have been. So I think there's a fair amount, and we think there's a fair amount of partisanship when it comes to that particular survey data. The retail sales number that we saw this week, I think, offset some of the soft data. So we're not dismissing, Mohammed, I don't want to give you that impression. We're not being Pollyannish about the risk. But the hard data continues to show an economy that may be growing slightly below trend.
And the lag between soft and hard is typically 3 to 6 months.
And we'll see if it plays out in the numbers. But again, we've cut our equity risk because of these risks. And again, it's not really tariffs that are the problem. It was the valuation problem. Why the heck would you pay 28 times earnings on the top 10 stocks in the U.S. when you can get 13 times on everything else when that U.S. exceptionalism shine is coming down? And that's the way we've shifted the portfolio model.
You mentioned Germany, and I'm pleased we can finish on that subject. Germany seems to be the game changer for a number of reasons, including the multiple argument you just made regarding European equities. Lisa mentioned the bond market. Does it change the fixed income story in any way, shape or form? One thing we've explored repeatedly on this program that I don't think enough people are talking about, when we have downdrafts in this equity market, this bond market stopped responding. And it looks like, perhaps for some people, they're reassessing the risk mitigation characteristics of treasuries because of the additional supply coming out of Germany. We've had a regime shift in German fiscal policy. And for a long time, the German debt market was the anchor around the global bond market. It was dragging treasury yields lower. Is the opposite starting to occur?
Unless it becomes inflationary in that part of the world. So that's what we saw in the U.S. When the 10-year note hit 5% and we had wrong way correlation on stock bond, John, that's when it became an issue. But I don't think you could say, okay, Germany just created an environment of fiscal kind of dominance and growth and say, yeah, but what about the bond market? It's not protecting us, right? I think we're looking at the positive side of it at this point, which is the effect on growth. And the effect on growth is going to be positive, which then affects the earnings story and everything else and the low multiple. So no, we're not gonna say that stock bond correlation is broken because of the German fiscal story.
Do you not think the bond game's a relative game though? A decision between treasuries and bonds that ultimately one offers a different rate now. Not just the multiple story. If you look at multiples as a relative game, which you have done, Europe versus the United States, why doesn't the same apply in fixed income?
Well, listen, the treasury market for us is still the flight to quality story. So we were never really looking at bonds as a way to protect our portfolio. It's always going to be the treasury side. So yeah, if we were deciding between bonds and treasuries, there's new information on the bond side, but we're really using the treasury market as a way to protect if we need that in portfolio.
10's right now, 429.65. I feel like we stress tested your argument. You're not as happy as you were, but forgive us. Phil Camprelli there of JP Morgan Asset Management with his views on financial markets right now and a multi-asset portfolio. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Gold has briefly touched another record high above $3,000, $3,039 an ounce as geopolitical tensions and growth concerns continue to drive the haven demand. The precious metal is now up 15% this year, further extending its 2024 performance. Both UBS and Goldman Sachs raised price targets on the commodity in recent weeks. Elsewhere, Sequoia Capital is set to return about 25 times its invested capital on the sale of cybersecurity startup Wiz to Alphabet. A person familiar telling us that if the deal goes through, Sequoia will reap around $3 billion from its roughly 10% stake in Wiz. Alphabet agreed to buy Wiz for $32 billion. The Trump administration has released previously classified documents related to the assassination of former President John F. Kennedy. The release consists of approximately 80,000 pages published without redactions, with more documents to be unsealed and released in the future. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. Up next on the program, awaiting the Fed.
People are looking for the Fed to sort of come to the rescue of the economy by cutting rates.
They've been pretty clear that they're on hold here.
I would count more on the Trump put than the Fed put.
That conversation up next with the former Kansas City Fed President, Esther George.
In case you missed it on the China show.
Compared to a 10% tariff on Chinese export to the United States, I mean, even the entire determination of the fentanyl industry in China is totally worth it.
I think this is a monumental moment for global AI development. DeepSeek was not only just make the products free, but also they released the entire research open source so you can see how they did it. This has forever democratized this current most advanced version of AI.
How do your students feel about their jobs prospects?
There are a lot of opportunities in this AI application fields. On the other hand, if you look at traditional manufacturing, I think the main problem is that there's a lot of mismatches between supply and demand.
Don't miss the China show live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
No drama this morning. Equities firmer by a third of 1% in the bond market. Yields just a little bit higher by a single basis point. Still in and around 430. Under surveillance this morning, awaiting the Fed.
People are looking for the Fed to sort of come to the rescue of the economy by cutting rates.
They've been pretty clear that they're on hold here.
This is a really difficult environment for them.
The Powell put is lower than we thought.
That Fed put is something we won't see.
I would count more on the Trump put than the Fed put.
Who gives first? Is it the administration or is it the central bank? I lean toward the central bank.
So here's the latest this morning. Traders awaiting today's Fed rate decision amid tariff uncertainty and rising growth concerns. The consensus widely expecting the Fed to hold rates steady. Former Kansas City Fed President Esther George joins us now for more. Esther, welcome back to the program. I think we all want to lean on your experience. How would you approach putting together forecasts in a moment like this one?
Well, good morning, Jonathan. A tough environment for sure, but there have been many tough environments in which policymakers have to pin down a forecast and think about what the future might look like. I think in this environment, there's so many cross currents right now that I think the tendency, and I would probably have been one of those, is to stick with what you saw in the data coming in at the end of the year and keeping this wait and see mode. So while I don't expect it will paralyze them in terms of moving some of the dots around in their SEP, I do think in terms of making any commitments about the path of policy is probably one they're going to be stepping back on at this point.
Esther, if you were still on the Fed, what would worry you more, the inflation aspect or the slowing growth?
So I think you have to worry about both, because I think right now what we see, I call it an engine warning light. You don't know if it's actually something that's about to cause the car to stop or whether it is just a malfunction here. And so I think that kind of uncertainty really continues to put, my own focus would be on inflation right now. That has continued to push back, and I think the risk is that you watch inflation expectations. You hope those remain anchored, but this is an environment of uncertainty, and we've already seen in some surveys and other measures that those are beginning to tick up. So I think the caution light here is one that would cause me to really think carefully about the embedded inflation here, and particularly at a time if you thought growth was going to be stepping back.
Esther, if I can push you a bit further on this, there's a big debate right now, as you know, as to how quickly and to what extent will the softness and the higher inflation expectation in the soft data translate into the hard data. Because it's been pretty striking what has happened both to growth expectations and inflation expectations. What's your view on this? How much information content is there from these surveys?
So for me, Mohammed, it take a lot of signal from what I see in survey measures. And again, the timing of when that might play out to your hard data is exactly the challenge that policymakers face. So when you see the household survey coming out of University of Michigan plunging the way it did, when you see even looking through the Beige Book, which was generally positive for the February data they were looking at, it began to bring up, though, more questions about uncertainty. In fact, I think in one place, they used the term nervousness. In that kind of an environment, you do generally see pullback. You see consumers holding back. You see businesses holding back. And that, of course, depending on how long that lasts, can feed through into the economy. So I think it is something that, for me, was always an important aspect of the data. Even though it might be soft, it doesn't mean it can easily be ignored.
Esther, in the 45 seconds we have left, I'd love to understand whether you discuss strategy with the chairman before he goes into a news conference ahead of time. Is there an agreement about whether he will tackle some of these policy issues head on, or is it something that he makes up as he goes along? What will the strategy be a little bit later?
Well, I think there's always a conversation about, as you go into the meeting, how are people thinking about it? What went into your own forecast going ahead? And then the process in the meeting is one to reconcile that range of views and to try to come to some understanding, not just for this meeting, but what are we setting in motion for meetings coming ahead? So that is, I think in this case, something that will stop short of forward guidance, but certainly something that they are thinking about in terms of what happens next.
Esther, you're one of the best. We appreciate your experience and your time this morning. Thank you. The former Kansas City Fed President, Esther George. Up next on the program, Gargi Chowdhury of BlackRock, Tom Narayan of RBC, and White House Special Envoy to the Middle East, Steve Witkoff, on the latest talks between Russia and the United States. From New York City, this is Bloomberg.
What would it mean for India to host the Olympics?
Yes, Linda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? So I think the move has to be a sustainable move.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers. You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We want to see where the Fed is falling. Are they starting to identify some of these signs of weakness?
They're likely to take down their growth numbers, but they're likely to take up their inflation numbers. So this is a really difficult environment for them.
They will be focusing on growth slowing down, and therefore the risks are that markets will be pricing in more cuts at the time.
People are looking for the Fed to sort of come to the rescue of the economy by cutting rates.
I think it's just too early for the Federal Reserve to make a decision, given the uncertainty about policy.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance starts right now with your equity market looking like this. Equity futures firm up by a third of 1%. The opening about 90 minutes away and a Federal Reserve decision just around the corner. That decision drops at 2 p.m. Eastern Time. It's followed by a news conference with Chairman Powell, and a lot of weight is going to be put on those forecasts on that 30 minutes in between.
Where is the emphasis being placed? Is it on slowing growth or is it on higher inflation? How do they do both when this is the most difficult situation for a central bank to find itself in? And how can they remain out of the fray? I mean, this really ultimately becomes the thing. This is not a central bank that wants to dominate a conversation that's undominatable other than one person. So how do they sort of remain on the sidelines when everyone is highly anticipating their words?
We don't guess, we don't speculate, we don't assume. You don't have to anymore. You've got the policy.
They have the policy. They have 25% on aluminum and steel tariffs. They also have 20% on Chinese imports. The issue is, of course, there is this uncertainty of what do we get on April 2nd. And this is why it's so different for the Fed dealing with Trump 2.0 than 1.0. 1.0, 2019, tariffs, inflation was what, 1.8%? It wasn't a concern if there was going to be a price shock when it comes to inflation. And the Fed was able to, with ease, cut rates. It's different this time around.
Mohammed said it earlier in the program.
this is the meeting. They've got to take a view.
Yeah, what are they going to say? We're waiting for April 2nd? I mean, we'll get more. Everyone's waiting for April 2nd. We'll get the bazooka, and then we'll understand exactly how we're going to proceed from there. They have to address the sort of elephant in the room that all of the Wall Street firms are addressing, which is growth is going down from initial projections. That is what everyone seems to be saying. And inflation is ticking up. They have to give a sense of which data they're looking at. Data dependency itself no longer has the same kind of credence as which data takes on the most importance.
We've seen a big cut to growth on Wall Street from JP Morgan, Morgan Stanley, Goldman, Deutsche Bank, RBC, Wolf Research. The list goes on and on. Mohammed, when they get together and put together these forecasts, do you assume that growth forecast is going to drop and by a fair bit?
I do. I think the question is, does it drop below 2% or not? That's for me the main issue.
The street quickly seems to be around 1.5. And then if you get that, do they then have to raise their forecast for inflation? And that's the mix. I think that's the really ugly mix to go into this news conference with. A news conference where you've just put out forecasts and you've downgraded growth and had to upgrade inflation.
As an investor, you have to step back and wonder, what does that mean? If you have growth that is falling, that is decelerating, at the same time that you've got inflation that is sticky and inflected upward, what does that mean about repayment of debts? What does that mean about the fiscal trajectory of a country that is trying to grapple with that right now on a pretty massive scale?
And that's when you force into the really difficult question, which is the longer term. Is this a Thatcher-Reagan moment where you rewire the economy in a certain way and you emerge from that stronger, with your debt dynamics under control, with fairer trading relationships? That's option A. Option B is this is more like a Carter moment where your policy decisions lead to stagflation, and that stagflation persists. I say this because I put it to a room on Monday of people I really respect. And someone said it's an 80-20, and someone else said it's 20-80. And that question is really critical if you're going to answer the longer-term issues that are so important for the market.
I think we all hope it's option A and not option B. Equities right now on the S&P positive by 0.2% on the S&P 500. Coming up this hour, Gargi Chowdhury of BlackRock as stocks look to rebound from a tech-fueled slide. Tom Narayan of RBC on his cut to Tesla's price target, and the White House special envoy Steve Witkoff on what's next for talks with Russia. That conversation about 25 minutes away. We begin this hour with stocks steady as traders await the FOMC rate decision.